Well, okay, now we are on
There we
screen, and I'll just, well, you're lagging a bit. Have we disabled? Oh no, we didn't disable local recording
Oh,
because
how do I
LJ
do that?
is. Yeah, okay. Well, that sucks.
Because that's weird. Because this time my computer itself, like my Chrome, is actually running fine.
Yeah, but
Right. Okay. Well,
your stream is a little bit blurry and a bit
yeah.
of glitches. Yeah.
Really.
Anyway, we are live right now, and it's Monday. It's the start of the week. Hope you guys had a wonderful weekend. Everyone watching, we got people in the comments. What's up, Henry? Welcome, everyone. And yeah, let's start with you, Dirk. You just mentioned that you went up very early today to
Yeah.
to code. This is what traders do. Normal people, they go up and they're like tired, maybe stay in bed for a while, but traders like Dirk, he wakes up super early before everyone else, and then he just starts coding on indicators and trading indicators. But that's what it is. That's the life of a trader. You are. It's not
obsession.
just. Yeah, it's you kind of have to be obsessed with this, doing the same thing every day. Is watching the markets. How long have you been in the market, Dirk? When did you start trading?
1998. Officially, I was in the market.
1998. Oh, that's a while ago.
I was in the market like before that already, like, but so to say, my official career, because back then, 1998, I started like an apprenticeship at a bank, so I kind of count this as my official starting date. Yeah, so that's really a long time ago already.
Have you ever had periods in your career where you feel like this is not what I want to be doing?
Yeah, probably every couple of months up to this day. No, see, I mean, I say that, of course, a little bit lighthearted, no? There are two perspectives to this. Whenever, you have like a bad phase, like I had one in August. September was also just so for me trading-wise, meaning I lost money there. Some of my strategies stopped working. So I always feel like I start at square one then again and have to reinvent myself, kind of. And these are always, because they are very, very work-intensive phases then. Those are the phases where I sometimes question myself with things like, hey, wouldn't you be better off like your friends, if you go to a regular job every Monday morning and then you bitch Saturday and Sunday about that you have to go back to work on Monday. But I mean, it's so satisfying. There's this uncertainty to it because you're not like every month successful and earning a lot of money. It's a lot of up and down always. But the freedom that comes with it, that I can choose for myself when to get up, like this morning at 4:30, when to work, when not to work, that I don't have to report to anybody else than myself and my wife, maybe, and my daughter. I think that's weights is equal to a lot of money that otherwise I would need to be paid by a corporation in order to say, okay, you know what, I'm going to join you guys. If I just think about, being in endless, pointless meetings and having to follow some BS KPIs that somebody in the controlling department invented that don't mean anything, and then ending up just being a number somewhere in HR where you can be sacked anytime, just because one manager that is above you doesn't like the other one or whatever. It all happened to me in my career when I was still working for corporations. And I never want to go back to this, but you have to always wait for yourself. Is it worth the struggle and the heckle, or isn't that worth for you? That's the nice thing. We're all different.
Yeah, no, I think for me it's definitely 100% worth it. But you also have to question, it's an interesting conversation because a lot of people are spending a lot of time in the markets before they become profitable, right? And I think that's an interesting question. So for you guys in the audience here, in the comment section, I have one question for you guys. How long time would you give it before you give up on becoming profitable? Like how many years of no progress or just very slow progress would it take for you to finally say, okay, I give up, I'm not able to become profitable? because
Interesting.
yeah, because I think before we tell them how long it can take and how long it took for us to really reach, a decent level in trading, it would be interesting to see, because you got to think about the time that you're investing in this, and maybe compare it to a university program or course, or a education that you're buying to get these certain certifications to go into a specific field and make a decent amount of money. So let's see, we can compare it to maybe becoming a doctor, 5-7 years to get to a decent level, become a doctor. A lawyer is probably around the same time. We got one saying, it's Vinny says 5 to 10 years. Okay, so Vinny says 5 to 10 years. Now that's a big span, though. Like, it's a big span. Like, that's a 5 years span. 5 years plus of full commitment. If you have a passion for something, you just don't give up. You keep going and enjoying it. You give up as soon as you stop enjoying the process. That's a good answer. The problem with this is, though, you can go. What if you go 40 years enjoying the process, but no actual progress? You're like, oh, you're living on the streets and you really like looking at charts, and you do that for 40 years. Is it worth it? You know what I mean? Like, is that worth it?
But I think there's something to it, because I remember one of my favorite musical artists is a guy named Mike Patton from a band that most of you don't know anymore, Faith No More. And he said back then, I'm in love with the process of making music. I do that from the minute I wake up until the minute I go to sleep every night, because I love the process so much. I don't really care so much about the end product of it. But the process for me is what I'm in love with. It. Now, he's lucky he's successful also with the end product to some degree nowadays as well. But I think there's a lot of truth to this, because otherwise you cannot motivate yourself. No, how to motivate yourself if you design 50 trading strategies which you work 2 years on, and then just to see them all fail? That is very hard. I'm exaggerating a bit now, of course, but if you don't love the process, I think then you cannot do a comeback. The other side of the medal, in my opinion, is also because we see so many people commenting something around 5 years here. 2 to 5, 5 to 10 years. There's a difference, of course, also if you are financially in a situation that you can afford to commit yourself fully to this and do something like, I'm going for the next year all in trading, and if I'm not then successful, then I should go back to a regular job. Whereas if you have a regular job, because you just cannot afford to be away and have no steady income for 2, 3, 4, or 5 years, so which means you can only dedicate maybe an hour or 2 hours max every day to trading, because you have other things like your regular job to concentrate on. I think that's also something that can keep you from becoming successful, because that requires really a lot of discipline then.
Well, so we're looking at the comments right here, and we have some people saying 5 years plus. We got 2 to 5 years. Someone says 5 to 10 years, and I think so that middle line we could say 5 years. So if you're not seeing any progress, or you're not consistently profitable after 5 years, you're going to be giving up. I think a lot of people do give up after 5 years, because 5 years is a lot of time. It's a lot of time, but I've also seen a lot of stories and a lot of people talking about the fact that it has taken them way longer than 5 years to actually find that consistent profitability in trading. And the real, the reality of this is such an advanced career, and it's so difficult to reach that level of profitability that most people want to reach. And then eventually you realize that you have to cut down on your expectations. Maybe you're not going to be able to be that profitable, and it all comes down to, well, not all, but it has to do with your personality and things like that. I mean, we can liken it to a top athlete. You want to become the best 100-meter sprinter in the world, right? Now, you might not be able to get to that level because of genetics or personality, whatever, right? but you might be able to get at least in the top 100 or top 500 fastest people in the world. That will still, I mean, in the world of sprinters, that's not going to give you anything, but in the world of trading, it's going to give you something stable. You're not going to be able to be the best of the best, maybe, but you'll be able to be somewhere in the middle. And if you do that consistently, you'll be able to make some money on that as well. But to actually reach any of those levels, you have to integrate the whole process into your lifestyle, right? And if you're not able to integrate that lifestyle, you're going to give up, because it's the people that have no option that actually becomes profitable. The people that, oh, it's 5 years. Well, okay, I don't care. I'm going to give it 50 more years. Like they do not have an option, because I have decided that this is what I'm going to do. There is no plan B. Like, there is no plan B. This is the only plan I have. Technical analysis, trading, content creation, working within this industry. I cannot see myself doing anything else, And for some people, they might actually have a plan B. And if you have a plan B, then you're going to quit trading, because trading is so extremely hard that any plan B that you have is going to be so much easier. And don't get me wrong, there is much easier way to make money. Go to get a degree and start working in whatever business you want to work on, and you're going to get a decent salary, and it's going to be so much easier than trading. But for some people, there is no plan B. They don't want to do that. They want to be trading, and that's the mindset that you have to have. There's no plan B, right? You don't care about 5 years I'm going to give up, 10 years I'm going to give up. Like, no, you don't give up. There's no giving up, and that's why I wanted to ask you guys this question. Very few of you actually said there's no time for me to give up. I don't give up. This is what I've decided to do, and I believe that's the passion you have to really make it in trading. Don't create plans for yourself. I remember when I started trading, and when I quit my job, I started my own business, and I quit my job, and I'm like, I was thinking like, but what am I supposed to do if this fails?
Yeah,
and I had no idea. I'm like, well, if it fails, then it fails.
Same.
And then I'll have to do something else.
Same
But
for me. When I was a long time in the position that I worked for corporations, for example, as a trader. Last one was like family offices, forex brokers. And when I finally did the step of saying, no, I want to stop making money for other people. I want to start making the money for myself now with the trading strategies that I had applied for such a long time. You know what happened? The first months I lost money. I consistently lost money because I always had in the back of my mind, this has to work out now. And if it doesn't work out, what is my plan B? I don't want to go back into a corporate job somewhere. I don't want to do that. But I need to have a plan B. Everybody who's sane has a plan B for something. It's not. You are not going to succeed like this. For me now has become a good mixture of being very serious, very passionate, very diligent, by the way, as well. So get this picture out of your mind of traders residing somewhere with their laptops or their mobile phones on the pool and trading a little bit while jumping or before or after jumping into the water or taking a sun bath or having a drink at the bar. It's just not true. You very often end up, at least that's for me the case, sitting here in my small office, dark small office for 14 hours a day, working on one stupid problem that maybe an API is not working, or that I just cannot find a way for my newest trading strategy to be successful, or the current setting, the best settings for that one, and so on and so forth. So you spend a lot of time thinking and working on small issues that will help you in the long picture, however, to become successful or make your trading strategy successful. And by the way, what you said about professional athletes is very true. The longer, with all the experience I made now in my life, I mean, I'm in 2 years, 1.5 years, I'm turning 50. So I'm just saying I have a lot of experience now. I become more and more convinced that the biggest factor in becoming successful, in the equation of becoming successful, is not being talented, it's being diligent, resilient and diligent. Now this
Yes.
probably very typical as a German when I'm saying something like this. Be resilient, be diligent. No, but but I think it's really like this, and you only can be resilient and diligent long time if you're passionate about something. Otherwise,
you said something important, right? You talked about you need to be diligent, disciplined, consistent in everything you do, right? It's like with content creation, right? You're creating content, you're uploading that, and you need to do it consistently, even the days when it's the last thing you want to do. You still need to do it. It's the same with trading. You got to show up every day. You got to do the things that you have to do. Follow the process, right? You also said something interesting, that you can't just be sitting on the beach with a laptop. You can, but not long term. There's a lot of things that goes on around with trading outside, and it's interesting that we see that the biggest influencers, and I'm going to call them influencers. I'm not going to call them traders. The biggest trading influencers out there, the more following they have, the less trading they do. Like the bigger the following they have, the more lifestyle content you see from them, and not a lot of actual trading and journaling and coding and gathering of statistics and testing trading systems, etc. So I think watching this, you got to be careful when it comes to getting false expectations within trading, because trading is not this super glamorous career. You're actually spending a lot of time doing things that is a lot of times quite boring, right? So if you're trading a technical system, for example, and you're doing that full time, you need to make sure that you need to monitor the performance of the system. You need to compare the forward trading results with the backtesting results. You have to do regular backtesting. You need to gather statistics. You need to make sure that the edge that you have, or that you think you have, is actually either improving or staying flat or deteriorating. You need to make sure that it's not deteriorating, because a lot of traders, they trade for myself included. I traded one system for I think it was around 4 or 5 years. And then after those 4 or 5 years, I decided to go full time. So before that, I traded for 4 or 5 years profitably with trading as my like side hustle. But then when I saw that I started making more money from trading than what I actually did with my from my salary, I said, okay, now I'm going to go full time. And I've saved up quite a lot of money, for myself, like more than a year's worth of living expenses, which for me at the time is a lot of money. And I gave that. I basically I started trading full time, and I did not have the right process set up to monitor the performance of the system, which ended with, of course, I had the stress of actually having to make money from trading. But what I ended up with is basically 1 year I gave all of that money away to the market. I lost everything. Okay. So what I could have done instead is take that money, a lot of money, put it into the S&P 500, and today I would have doubled that. But instead, what I did, I gave it all to the market, because I forgot about this very, very simple thing in the process to compare my forward trading results. Could you just have a simple moving average on the equity curve, right? With my backtesting results. Do I see the same performance this year, which was 2023, as I saw from 2019 or 2018 and whatever? And if I had that, I would have seen that there's something wrong with my trading. The trading that I have this year is not the same as for the last 5 years or 4 years. And you're not you need to be super focused and clear about those things. And you need to trade at a professional level and really act as a professional. And you can't really do that with just sitting at the beach all day with a laptop. You're not going to have a lot of time.
I cannot. I probably would get distracted by too many margaritas or Long Island iced teas.
Of course you would, Dirk. There's a lot of things that would be distracting on the beach. Definitely.
Other things also, which I didn't want to mention now. Risking my wife is maybe watching this. But guys, I have 2 things I want to say, if you don't mind, before we go over into the charts. The first one is a question for LJ, actually. On a scale, LJ, from 1 to 10, how stupid is McLaren?
Oh, I can't even. Oh my god, dude.
I mean, I was sitting there
I have
yesterday
never
evening and
seen.
thinking, like, what in the world are they doing? Why didn't they at least take one of those two guys into the box, you know?
I know. I feel so bad for Piastri in particular because he got done the worst, right? At the time, though, I was also like, yes, this puts Max and Piastri kind of still in it, right? And Norris can lose because, like we said before, I don't want Norris to win, you know? So I was like, it's happening. It's happening. But yeah, that was one of the most ridiculous things I've ever seen. Like, especially when they know for sure they have the 25 lap limit.
Yeah. And what are the odds?
You're literally on lap 7.
Yeah.
There's no more perfect setup. It couldn't have happened better.
I cannot understand this. Really. And the second question is, which already is a trading related one. If Jonatan, you don't mind me quickly going over to my screen.
Of course.
Is already showing, I hope. Yeah, this is this the story of the day for you also, LJ? We've seen a 17-year high in the 2-year Japanese bond yields. And what we see parallel to this, which is the more interesting aspect, of course, about it, is the dollar yen having a sharp dip down. And I'm really wondering, and I would be very interested in your opinion, if this could be the beginning of what both of us have been waiting now for a while, like the unraveling of the dollar yen carry trade.
Indeed, I think so. I mean, I've been staring at this this chart as well when you go longer out the curve the whole year, and it's been quite perplexing when you overlay that with the dollar yen chart. They've kind of gone the exact opposite, which has been quite interesting. So I think at this point we are getting to those floodgates, especially now that we really are getting the pressure on rates coming down. I think kind of the jig's up. I think we really needed to make some kind of move or some further deeper rhetoric from Bank of Japan and the Ministry of Finance to say that rates are going to be on hold for longer. They keep saying they're not going to be. They'll be gradually going up, and they've stuck to that. So I think the market's sort of been waiting to see if they balk on it, and it's all talk, right? But they're firm on it now. You know, they keep going back to it. So we've had all the companies as well, a lot of the major companies in Japan speak out publicly saying they don't really like the dollar yen above 155. Starts to hurt their business, that kind of thing. They've been, taking that on the chin for some time, but it's getting a bit much. So, yeah, I do believe this is going to be the unraveling of it, coupled with US rates coming down more substantially going into next year. So.
Yeah, that's the accelerator to it, This we have not only the Japanese yields going up, as I just said, the 2-year yield is for the first time, I think, in 17 years, if I read this correctly, above 1%. Actually, open with a gap to the upside this morning. That's not something you ever see every day on when it comes to treasury or trading or yields. Okay, we had a weekend between that, of course, but we also have. If we look here at the 10-year one from the USA, it's it's coming down slowly. And this creates, of course, this makes, for everybody who doesn't know what a dollar yen carry trade is, you basically could translate, if you go long a currency, for example, dollar yen, you buy US dollar and you borrow yen against it. And so far, it has been that this long trade was very attractive long term because you got more interest rates for the US dollar than you paid in interest for the yen you were borrowing. So you could leverage this like crazy, and basically get free interest, at least if the conversion rate of dollar yen stays within certain boundaries. And this is becoming less and less attractive. And I think slowly, like LJ just said, for me, also amazing that it hasn't unraveled early already. But slowly it seems like the market is realizing that they need to get out of a position. And as we've seen many, many times on the Forex markets, if something like this happens, then suddenly everybody wants or needs, because of margin calls, get out of those positions at the same time. And then we see the moves we, for example, saw to a certain extent this morning already. I mean, for currency, this is already quite a move. And who says we cannot see something like this, candles like this? We had this in the past also, especially mid 2024. The last time we were talking about this in more detail also. But yeah, I hope my models, after all, finally are correct, that are predicting would be trading around 130 and not 150.
Yeah, I think it's just been the back and forth around the US rates actually going down.
Yeah.
Like we've constantly gone back and forth between yes, no, yes, no, yes, no. Trump jumping in the middle. Him getting mixed up with the Federal Reserve, all these kinds of stuff, the government shutdown. So I think it's just been one of those sort of waiting for a clearer trigger pull.
Yeah.
So then structurally, people in and out of stuff. Yeah. And that's sort of just kick the can down the road for the time being. So.
I'd like to show you guys something on if we can switch to...
Your mic is super loud and distorted.
Is it loud?
Very distorted. There's like background noise always coming in. Like ring, ring. Maybe your gain is a little bit high if you use an extra.
Is it better now?
Yeah, it's a bit quieter now, yeah. The background.
Okay.
Yeah. Didn't want to interrupt you.
No, okay.
Yeah,
good. Okay, so
that's a good chart, yeah.
I want to look at... okay, let's go to USD/JPY. We can look at this one. And what I've added on here... Let's actually make that... let's add the... we can add the yield spread between the US 10-year and the Japanese 10 years. We can go in, type in US 10Y. Is that a dash? I don't know what it is. Dash line, line. It's a horizontal level. US. Okay, so the US 10-year, JP 10-year. That should be it, right? No. Let's see if that's actually it.
If you add the...
No, that's the wrong one. How do I actually do that? Okay, I have to add...
I don't think they have a spread for those readily made there, because
you have to make a synthetic one. So you do US 10-year, and then you press, what is it?
Slash
minus, or is it plus? Anyway, I have it here. Okay, so we'll go with this one. This is the US 10-year to the Japanese 10-year yield spread. And then we can add USD/JPY to this one instead. So we'll do this. Now, what's interesting with this is we've had a pretty good correlation up in this range, where you can see here. We have basically the highs and the lows are happening quite at the same time. So this is the blue line, the blue trend line, or the blue line chart is the yield spread between the 10-year US 10-year and the Japanese 10-year. And you can see the highs are like somewhat correlated with the lows. But here you're seeing a complete disconnect.
Yeah.
So usually a lot of times you see that USD/JPY wants to move because it's the currency that is either one of them is lagging. They're going to have to, eventually they'll start trading correlated again. So we can then look at USD/JPY, and I would say, if USD/JPY, if the relationship would be reversed and USD/JPY would be trading at support, then I would say, okay, we might want to be looking at USD/JPY for a long position. But if we go to USD/JPY here, we'll see that it's very much not at support. So let's remove that one. This is the weekly for USD/JPY, and we can clearly see that it has, let's remove this one. So we can clearly see that it has broken above this trend line right here. It's approaching the major high time frame top right here, and it has printed a weekly, sort of like a weekly doji candle right here, and we have a big move to the downside right here. So when I'm looking at this, the first thing I'm thinking is a short, a type of mean reversion type of play. But what I want to see for that to really be active, I would want this level, because we had a fib here. I think we potentially can have a very big move to the downside on USD JPY in the next few weeks, and it might actually last a couple of months. Because if this carry trade that you're talking about, I've heard about the idea of the carry trade on unraveling, whatever that's called, and then you're getting a complete shift in the market. And if that is the case, then what I'm looking at here is basically for this current trend that we're seeing right here to break. Now, we are in the area of interest for potential longs right here, but if we bounce here and create a lower high, I think that is a perfect opportunity to then take USD JPY lower based on the relationship that you're describing now. So we have a very clear range EQ area right here, and from current prices, we're talking about a fairly big move. I mean, we're talking about somewhere between 2 and 3% move to the downside for USD JPY, which is a move you can make a lot of money on if you are positioned right. But what are you thinking about confirmation for this from a technical point of view? Because right now we are in an uptrend locally.
For me, it's a typical trade that I do with options, because I don't want to rely too much on timing on this trade. So I was already this morning looking into how I can sell call options, dollar call, yen put options, somewhere with a strike price around 160, because you can, like with 3 months expiry, which gives me a good amount of gamma from this that I can get from this option still. But at the same time, I have the time decay kicking in already, meaning if price doesn't move, the option gets cheaper and cheaper and cheaper every day, which I want, of course, as somebody who sold the options and whose max reward is what I got for the option in terms of money. Trading this as a spot trade, a little bit more difficult. You could trade it maybe as an outright trade if you say now, okay, I'm going to sell dollar yen with a settlement already fixed 3 months down the road, because that gives you a little bit more leeway and that calculates the current interest rates also into that. Although it's questionable if you want that, actually, considering that they are coming closer together. Can you quickly show your chart before that again, the one where you have the spread and dollar yen overlay? Because I think that shows very, very good what has been the problem since mid-year for trading dollar yen into our favorable direction. Yeah, if you zoom
Okay,
out,
so we have USD JPY is the
blue line.
The blue line, yes.
Yeah. So, and I mean, you can see there, by if you follow something like correlations. Remember, we've done this a couple of times, for example, with Bitcoin and M2 global supply as well. You would say now, well, sooner or later, dollar yen has to follow the spread again, which would lead it down to, where's that, like 122 or 127, around the 130 area I was mentioning. If it were to catch up immediately, we would probably see dollar yen going down to 130. This usually doesn't happen, but it shows what made it so difficult, in my opinion, from a technical perspective, also to trade dollar yen. You had since basically July, actually earlier, I think in March, it started to diverting already, that you didn't follow the pattern it usually should follow. And that shows also why it's sometimes so difficult to trade with correlations, because they work in like 75% of the time, but the 25% of the time they don't work, you're really at the very wrong side of the market. And I think this pattern we saw, I think we touched on this also the last 2 weeks or something, LJ, if I remember correctly, is that there's really a lack of alternatives when it comes to dollar-denominated investments, apart from buying U.S. Treasury yields or treasuries, for example. So where are you going to invest? We are in a low interest rate environment and uncertainty environment. If you want a somewhat stable income yield without like putting super much money on the table, which you can leverage, you are very quickly, things are boiling down to the dollar yen carry trade. I think this is one of the reasons why we've seen that because the lack of alternatives being out there.
I think it's time to move on to gold. I know a lot of people are asking about gold, and I'm trying to look at the settings here from my microphone. Apparently, the gain is very high, but I think it's actually an issue with the software that we're using, because I did record a video right before this, and sound was great on that video. Anyway, let's move on here. We're looking at gold. Now, for gold, obviously, we're seeing something very, very interesting, something I like to see because I am long on gold here. As you guys know, I did enter a long position last week on the 25th, I believe, on Tuesday last week, and it's looking good. I don't really have anything to add on this. I've limited my stops here. I'm not going to be adding to the position. I think it's a little bit too late to add to the position here. I might add to the position if we get a move back down, and then I might be able to add if we have a higher low. What are we thinking in terms of gold here? I think we did have a scenario when everyone was watching gold, where you guys remember people were lining up outside the physical stores to buy gold. A typical top scenario in the market where people are going crazy. They need gold, and we had gold all over the place. We had the front page of newspapers, people standing in a line everywhere you looked in the financial media. It was all about gold. And my question is, what has changed other than the retail idea of gold? Has any of the underlying fundamentals that drove gold higher, has that really changed? What's your comment on that?
My computer's lagging so much. I can't tell if you guys can hear me or not.
Yeah, we can hear you, of course.
Yeah, we can hear you.
All right. I don't think anything's fundamentally changed. I think the retail portion will keep jumping in so long as prices continue to stay high like they are. I think there's further and further reason to keep buying gold as both the protective asset plus, the unloading of liquidity and potential QE coming back into the market going forward. From the institutional side, whether you're a hedge fund trying to speculate or you're a defensive player, managing like a pension fund. I think gold's in this weird sort of scenario right now where it sort of has everything going for it, right? I can't see any reasons to be shorting gold, to want to be dumping gold. And I think that's just going to be the consistent theme and narrative, probably even as far as the next 2-3 years, even really. There's a lot of risk, there's a lot of uncertainty, a lot of questions out there, restructuring of the labor force as well, and what work means going into AI and all.
Well, yeah.
Oh. He was gone suddenly.
He's gone. Yeah. Well, okay. So definitely some interesting comments there and some interesting points. Basically saying that the overall fundamental underlying reason for gold to rally in the past has not really changed. And I do share the same opinion, although I'm not that deep into the fundamentals. I can't really comment on what's driving this right now. But I do feel like we've had we reached a climax of a speculative, almost like a speculative bubble. But I don't think this was really a speculative bubble. But because obviously the bubble didn't burst. You look at the weekly here on gold. This is not a bubble bursting. This is far from it. This is just a bubble contracting a little bit, and then there's a bunch of kids, blowing bigger bubbles and making it even bigger. They install this bubble machine. The ones where it goes automatically with batteries, and then it's just bigger. Eventually, we have to ask ourselves, when is a bubble in gold bursting, and what does that look like?
I mean,
think
that's
there's always going to be an underlying demand for gold, which is like it's not tulip mania, right?
yeah, that is true. But I mean, we have to also see that it's like already the largest liquid asset in the world, if you want to call it liquid, apart from real estate, obviously. So the growth
Pretty
potential,
solid, I would say.
the growth potential should be, I'm not going to say limited, but at least not be as volatile as we are seeing at the moment. As I said many times before, it's an expression of the weird times we are in right now. Also, that the risk-free alternative, which gold classically always was, if you don't want to invest in stocks, is not there anymore. If you want to look for risk-free assets, maybe classically you would have bought like a treasury bond from the USA or something US dollar dominated. Now with Donald Trump, maybe you don't want to do that anymore because you don't trust the USA anymore. I mean, we're talking about a country who is reluctant to release their economic reports suddenly, which is also something we've never seen before, by the way. So of course, the story for gold is still there. I absolutely agree with you. On the other side, seeing a bubble burst is almost impossible. When bubbles burst, things tend to escalate very, very quickly, as we've seen, for example, in Bitcoin. Just now was like very fast from 126 or was the high down to under 80,000. This morning, again, long liquidations. We went down by 5.5%. The same can very quickly happen for gold. As a side note, if you don't mind, I want to show you something I've been working on for a couple of months. And I shared this with you already in private messages. So a while ago here on the live stream, I made the promise that I wanted to create an Elliott wave indicator for TradingView. And I've been working on and off for the last really 3 months on this. It has become a little bit difficult, actually, because the theory behind Elliott wave is very, very complicated, in my opinion, and bound for a lot of interpretation, how to count waves and so on and so forth. It's really one of the most complex things when it comes to techno analysis, in my opinion.
Can I just say one thing on that, because it's I'm actually studying Elliott wave right now for the CMT test, and I've kind of gone through most of the rules. I'm trying to just get an overall understanding of the process. And yes, it's complicated, but I think what makes it complicated is, if this happens, then these rules apply.
Yeah.
But if the structure then changed to this, then these rules apply. And some of these rules might not apply, and some of them might apply, but we don't really know. That's up to you to decide. And that's very, very, I have a difficult time understanding how to really.
That's also what it made so difficult in coding this indicator, by the way. I can show you an example for this later on Bitcoin. But it's interesting. So basically what this indicator has all the foundation of Elliott wave incorporated in it. So it knows what to expect as an outcome when XYZ set happens. And this indicator, for example, is saying right now that the overall sentiment or structure for gold is bound to turn bearish. So it says right now, the forecast is, first of all, it says take profits right now. The forecast is that somewhere within this green window here, we're going to top out probably what is the top of wave 5 again. And then we are going to see probably a correction to the downside. But like Jonatan just said, this, of course, can change very quickly if we see movements either to the upside or downside of this box, because then the wave count again would become more difficult. And to that, so for me, a tool like this is not like an ultimate tool, that can forecast the future. But if you combine this with normal support and resistance, or with what we do anyway. I mean, how often do we do this also live on this show? That we show market structure by showing higher highs, higher lows, or the opposite of it to identify what is the market structure at the moment. Are we in an uptrend? Are we in a sideways trend? Or are we in a downtrend? And if you combine this, for example, with with a tool like Elliott Wave, I think long term it can give you more insights of what is actually happening on the market. So again, looking for confluence, if things align, if things become more clearer in terms of market structure, this can be a powerful tool. I don't think it's working very well, honestly, on microstructure. So if you apply something like this to 5-minute charts, I cannot really see the benefit of this. But when it comes to uncertainty, I want to show you an example for Bitcoin. So this is what has been showing now for a couple of days already. This is not from this morning. Here we, according to Elliott Wave theory, that is, it said, well, we should see a swing high in a very broad area, somewhere around 92 and 109,000 US dollar. If it goes above 116,000 US dollar, then the whole structure would become very different again. But it said the last correction, so the one we saw up to down here, was like too bearish, mean the likelihood that we are now seeing continuation of bearish momentum is higher than what we are returning to bullish momentum. And I think this is very interesting. Like I said, the first time I applied this indicator, we were at this green candle here, so around 87, and it said, well, somewhere in this box we're going to top out and we are going down. And this is exactly what happened in a quite spectacular fashion, in my opinion, on Sunday with the liquidations we saw on Bitcoin. So yeah, it's like the more I look at it, the more I lean towards, hey, this can actually make sense using on higher time frames to kind of get an overview of what is the current market structure. Am I overseeing something like this? And if this one, for example, sees something different, then I can question myself if I miscounted higher highs, higher lows of a market structure, or is Elliott Wave in general just a big fugazi that doesn't tell you anything?
Yeah, Elliott Wave is very subjective, and it's very very subjective. I'm gonna try to make a count here on gold.
Yeah, please do that. That would be interesting. Since I'm a noob when it comes to Elliott Wave, but
so we do have
on the daily, no.
Yeah. So
good.
the issue here is, so I guess this would be more of a sideways structure, which would be more of a diagonal. So after the Elliott Wave diagonal, we're looking at this as the impulse move. I'm looking at this as the impulse move, and obviously the impulse move, that's the bullish move in this case, and then we have the corrective move, which moves in the opposite direction. So if we can go to trading view here, and we have the impulse wave is the 1, 2, 3, 4, 5. So the way that the Elliott Wave works is you have an impulse move where you have 5 moves to the upside. I can show you, and then you have a corrective wave which moves in ABC, so at 3. So first a 5-wave pattern, then a 3-wave pattern. So if we count this as 1, 2, but the problem is the third one wants to get above the first one. So is this really? I don't think this can be categorized as an impulse move. And then what is this? Well, maybe it is a. This is the issue with the Elliott Wave. Like, so okay, so this is not. This can't be an impulse move, right? Because then.
But couldn't the 3 be the candle we saw today? This last one that went like spike to the upside there.
This one.
Yeah.
So you're thinking that it's 1, 2, no.
No, you can start from the bottom again, where you started just now.
Here.
This one, then down, and then you leave the other lower high out of the equation.
So here.
Yeah, exactly. Yeah.
That's interesting. Let's see. Okay.
You cannot count the highest high there. It needs to be.
So it would be
the closing price, and I'm questioning that because I don't know. Like if you to the highest, the wick all the way to the upside there. What was that?
This one?
No, on today's candle, isn't there a wick to the upside to 4,000? And what was that there? Or was that an artifact?
Yeah. Okay, that wick. That's just my
Okay,
something I have.
never mind. I thought we had
Um,
like this crazy wick to the upside this morning, maybe already.
so this is the issue with the Elliott wave, counting the waves. It's very difficult to get it in. But I think what the usual Elliott wave would look like this, where you have a 1, 2, like a normal market structure 2, and then the third one, the third wave needs to be higher than the first wave, and then the fourth one is not going to be lower than the second one. It can go into the territory of the first one, but it should not be lower than the second one. And then the fifth one is usually the biggest one, if I'm not mistaken. And then what happens is you go into the correction wave, which is a 3-wave pattern that is A, and then B can't be bigger than the top of the start of A, and then C cannot be higher than A. So it's basically like this. So you have a impulse move to the upside and then a corrective move, but they can look very different. It can be, you know, a zigzag pattern, it can be a flat pattern, it can be a diagonal pattern. They can look very, very different. So you have to kind of like understand where is gold right now. But the beauty of Elliott wave is that when you get the counts right, you can actually start to actually in a fairly accurate way predict with certain probability what direction the next move is going to be, and that I like quite a lot.
I mean, that's always what we are looking for as traders, anyway. No, like
Yeah, exactly.
the crystal ball that makes. But we can see already, it's like really, really complicated, especially with those corrective waves. And if you don't count correctly, the whole picture changes. Suddenly, you find yourself in a situation where we have a trend continuation on extended wave or something like this. I think it's very, very complicated, and I'm nosy to see really over the next couple of months, and we can circle back on this, of course, every Monday, how this trading view type of indicator with limited possibilities you also have in Pine Script, I have to say. How if this is a tool, that is going to really help us a bit in at least identifying, what is the market structure we're in at the moment. Because this is one of the biggest challenges always, to see like when is the market structure actually changing and when not. Because you need always confirmation first.
Yeah. We have an interesting comment right here. What was the one problem you faced after learning a profitable strategy? What's the one problem? I think it's a good question, and
more than one problem also, I think.
Yeah, more than one problem, but I think it all boils down to one problem. There's a lot of problems around this one problem, and it's the same for everyone, I believe. It's sticking to the strategy and only taking the right trades of the strategy. Because if you do that, if you have a profitable strategy and then you take all the trades of that profitable strategy, then you have no problem. You're profitable. You have no problem. But the issue is actually sticking to the strategy, taking the right trades that the strategy is giving you. And there can be so many different problems that the effect of those problems, or the cause being the problems and the effect being the fact that you're not taking the right trades. We have a long list of issues, right? Long list of problems. And that's something that you have to figure out yourself. But for me, I think it's difficult to really pinpoint the issue. But in the beginning, there was a lot of frustration in connection to my trading, and I think that frustration came from not being in line with my personality, not trading the way I'm supposed to be trading, because I realized that if I'm going to be swing trading the way I want to be swing trading, just like I do with gold right now, I'm not going to be able to take a lot of trades. And if I'm not going to be able to take a lot of trades on a monthly basis, I'm not going to have the return in R value as I might have expected to have when I first got into trading. I was thinking like, how much money do I want to make on a monthly basis in terms of risk to reward? And I was thinking, maybe somewhere between 5 and 10 was, what I was looking for. But now with the system I'm trading now, we're talking more about 1 to 2 R in a month. And it was very difficult for me to come to terms with that, because then I thought, okay, well, if I want to make the amount of money that I need to make, I have two options: either increase risk on the trade in percentage wise significantly, or get more funding. And getting
Oop. There he went away. What was that? And I think he's coming back. You coming back? I can hear you. He is again. That was weird. You're pulling an LJ on us.
So what I was saying basically is I had two options. Did you hear that?
Yes.
Yeah. So increasing risk is simple. Increasing the amount being funded is obviously much more difficult. But the issue that I did have was coming to terms with who I am as a trader, and then trading based on that. And who I was as a trader at that point might not have been the trader that I wanted to be. And so there was a big conflict here. I wanted to be a day trader, a scalper, someone that's just very focused on a specific time of the day. I wanted to be like a specialist when it comes to trading and technical analysis, which did not align with my personality, which is more long term, thinking a little bit slower, being more of a general expert at technical analysis and not a specialist with one type of trading style. And for me, I think that was the turning point for me when I realized that, okay, all of this low time frame stuff, all of that, that's not me.
I think that's one of the most important things I've ever heard from you. Not to say that other things weren't important, but that is no.
One important thing.
That's why I said one of the most important amongst an endless array of other important stuff you've said over all the years we've known each other now. But like aligning the view you have of yourself with reality. This is what trading is all about, and this is, by the way, also what other professions out there where you can become very good, be it as an athlete or in any job out there, when you want to reach like the top tier people who are renowned to be very good at that profession, or the so-called experts, that they have a very good understanding of who they are and what their capabilities is, and especially where their strengths lie. And I agree with you. For me, at least in the beginning of my career, a very long time, I always thought of myself like, I'm the scalper. I want to do like 100, 200 trades, ride the small up and downs. And then I had to accept at one point reality that I'm not, at least not when it comes in a manual way. It's so in order to satisfy that itch, I had to create automated strategies. And then I saw, well, on those super high trade count scalping strategies is actually super, super hard to become profitable, because the spread, the commission, slippage plays such a huge role. It eats up so much of your profit you have there, that it's actually very hard, even if you automate your back test on something like this, to take account for this. You often end up like 50, 60, 80% of your profit being eaten up if you try to by slippage, by spread, by commission, if you trade something like the 1 minute chart, or some people even in forex trade tick charts, for example. So I had to settle somewhere for the middle. Actually, I saw then not suddenly, but over time, I noticed like, hey, when it comes to long-term forecasts, I'm actually very good. I'm the majority of the time I'm right. And if I put my money then where my mouth is in the long term, it's going to profit me. But it's very hard, as somebody who's notoriously very, very, how to say that in English, I cannot wait I don't like to wait for results. Impatient, thank you. Very impatient, notoriously impatient. It's hard, to put your money in and then to accept, now I'm going to let it run for 1, 2, 3, 5 years. But still, over the last 10 years, this is where I made the vast majority of my money. And then now lately, when I finally found the time to do more of my second passion, which is coding and automating things and creating indicators, creating scripts in Python, I found somewhat the middle ground where I saw actually on lower time frames, where I'm not saying 100 trades happen a day, but where something like maybe 5, 6, 7, 8, 10 trades per week happen, I'm actually very good if I automate things like this. Because if I don't automate things, I very quickly fall for the same traps a lot of traders, new traders especially out there, fall, that they have a good strategy that is long-term, over, let's say, 1,000 trades profitable and with a decent R. But they throw it all overboard because they focused on what happened in the last 2, 3, 4, 5 trades. And we've all been there, no? If those are losers, then you kind of start doubting yourself. You want to adjust your strategy. You start adjusting it and see, well, if I had traded it like this or like this, then actually the losing trade would have become profitable, or it would have ended up at break even. And this is the worst place as a trader you can be in. That's why it's so important to have that trading journal if you want to do it all in a manual way, or to be able to back test your strategies in a way that not optimizes the strategy, how it would have been the most profitable in the past, but to take your vanilla strategy with the settings you would use in real manual trading and say, how would that have performed in the past? And if you see, this actually made money. This made me money with a good R. I lost maybe at times I had a drawdown of 10%, but over the same period of time, it made me 80% or 100%, which is a very good risk reward ratio, of course. Then you need to trust the system. And I think it's for traders, because we need to rely so much on our own opinion. We are alone in the boxing ring, in the pit, fighting against other market participants. It's very, very hard to accept sometimes to rely on the greater outcome. That's what I want to call it. To rely on, this is what most probably is going to happen over the next 100, 500, 1,000 trades, rather than focusing what happened the last 5 trades. Because in every system, even if you have the perfect system, which nobody has, which is 95% of the time right, and will have an outcome, a profitable outcome of a trade, over long-term periods, you will have this period where you are wrong 2 times, 5 times, 10 times in a row, no matter what your success rate is. And I guarantee you, those, if you're not prepared for those will question yourself in ways you've never thought possible.
Yeah, no, I completely agree with you. I went into a very long drawdown. I mean, I had months and months and months of drawdown, which is that particular drawdown showed me that I'm very good with risk management, but I was just trading a flawed system, a system that maybe the system lost its edge, or I lost my edge trading that system. But I went into almost a year-long drawdown, one of my biggest funded accounts, and it's just a drawdown, and I managed to keep the account for almost a full, I think, not a year, I think it was 8 months or something like that. Managed to keep the account in 8-month drawdown, but then eventually I lost the account because if you're not profitable, eventually you'll be trending down to 0, if not break even. And that taught me a lot about myself, and really changed a lot in my approach. I wanted to just go move forward here with the
very quick as a last comment on that. I mean, the good thing in that is it shows also how important risk management is, because with a drawdown period like this, I think 90% of other traders would have blown the account already after a month or 2.
Yeah, because most people they risk 1 to 2% of their account in a trade, and then if you risk that, I would have blown the account in a couple of weeks.
Or revenge trade, think I lost 3%, I need to risk more to make up for it now.
Yeah, and I mean, at the last part of that drawdown, I was risking 0.1% per trade, and then you have people risking 10 to 20 times that amount, and they're like, oh, I don't know why I'm not profitable. Well, maybe because you have no idea what your max drawdown is like, and it's so frustrating because you go on social media and I've decided to start this new project of mine on my personal channels, where I'm going to do these reaction videos, where I'm going to take these outrageous, ludicrous shorts from people, and it's like some new guy pops up and it's like he got 100 followers and it's like been trading for 2 months, and he has a video of like this one trick will make you profitable. It's like, oh, nice, and I watched the video. It's like, oh, this is the only thing you need to do to have 90% win rate in the market. And I watched the video. I'm like, wow, that's bad. It makes no sense whatsoever. From a technical point of view, makes no sense whatsoever. All this person wants you to do is sign up to the Telegram, sign up to the Discord, sign up to blah, 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 all of that. And I'm like, start trading today must be very difficult because you have no idea. You don't know where to go. And then you have these big accounts with millions of followers doing the exactly same thing. I saw a guy on Instagram has like over 500,000 followers, and one reel I saw is like, oh, copy my 75% win rate trading strategy, and then a couple of shorts later, it's like, copy my 90% win rate strategy. I'm like, wow, you got two strategies, one with 75% win rate and one with 90% win rate, and you're trading both, and they're based on illogical technical analysis. And then people ask us, why am I not profitable? Well, maybe get off social media, pick up a book on technical analysis and test it and develop a system for yourself. Because again, the more followers you have on social media, the less money you need to make from trading, because the followers are the product, and you're making a lot of money from affiliates and selling courses and everything. So the more money, the more followers you have on social media, the less money you need to make from trading. It's important to remember that, right? Because if you have 1 million followers on social media, you're going to make more money from your followers than from trading. And that's the sad reality of this industry. And that's why a lot of new people come into the industry and they're like, oh, I don't really know where to start. Well, first of all, start with the concepts that was created before social media. Like, for example, buy the book, technical analysis of the financial markets by, I don't know what it's called, technical analysis of financial markets. That's a good book. You can start with that one. It's called, it's the book by, I got it here, John J. Murphy, Technical Analysis of Financial Markets. This book was, I believe, written maybe, 30, 40 years ago. And those concepts are actually the concepts that you're seeing in social media, just a little bit different branding, right? So, yeah, okay, let's move on.
Sorry, I have to tell this story now, because this morning because it fits so nicely into what you just said. I saw a YouTube short by a guy who was talking about the power of Fibonacci retracements. Now, the problem was with that, not that he's using Fibonacci retracements, totally okay as levels of confluence, but he didn't pronounce Fibonacci correctly. He always said like Fibonacci, and the text overlay also was writing it like he pronounced it. So he was talking about this awesome power of how he's making so much money with Fibonacci levels, but he cannot even pronounce or write Fibonacci correctly. So this is inexist, exactly what Jonatan was describing just now.
Yeah, no, it's amazing. And you know what, like, it's also very, very simple to know if they're the real deal or not. All you have to ask them is, just show me a verified broker statement for the last 6 months. And that's it. That's everything you need. And before you go asking me for a verified broker statement for the last 6 months, I'm not trying to sell you anything. I'm just going to put that out there. I'm not trying to sell you anything. I don't have anything to offer. I don't have any courses. I don't have any private mentorship. I'm nothing like that. Everything I do is for free. And I would not say that I have been consistently profitable for the last 12 months. I can show you my prop firms and I can show you big payouts, but I can also show you a lot of losses. Okay, so my profitability for the last 12 months has kind of like gone up and down. I'd say I'm slightly profitable, right? Slightly profitable. But still, there's guys out there claiming that they make, hundreds of thousands of dollars on a monthly basis, and they have done so ever since they put up their first, took up their first technical analysis lesson. These people, you have to question. You have to see the proof of that. Okay, if they're trying to sell you a course for 5K, you have to question their. You have to ask for proof of not prop firm payouts. You have to see their personal accounts. You actually. We have to have some type of accountability in this industry. It's insane. We say that 97% of traders today are not profitable. I would say 99% of influencers are not profitable. And the more followers they have, the less profitable they are.
This is why the 5%ers are also called the 5%ers, right?
Yes, exactly. Because we are the 5%. We are the 5%. We are, but yeah. No, absolutely.
I've been seeing earlier somebody who requested very, very often your view on cable. So maybe we want to satisfy that itch, or do you have some? Oh, you have cable already on the screen.
Yeah, exactly. I'm just completely going off on the industry here. An industry that I'm part of, and an industry that I'm also in trading influencer. It's like, it's difficult at times. Anyway, we got GBP USD right here, and it is now I look at the weekly and the daily. A part of me, an important part of me being able to stay in the flow state of mind is that I am very, very rarely now for the last couple of months going below the daily, and it is such a joy staying on the daily. I can ignore everything that is happening on an intraday basis. I know that it's not just completely noise. We have the fractal nature of the markets. Anything that happening on the higher time frames, you'll see the same structures on the low time frames. If you're profitable trading low time frames, all power to you. It's very, very much profitable. But for me to be able to more easily tap into that flow state of mind, I need to view any type of intraday price action as noise. It doesn't mean that it's noise to you, but for me it is. So looking at the daily right here, I see some conflicting ideas for GBP USD, and I'm going to use the replay tool here to show you one alternative where the conflicting views were not really that conflicting, because now when I remember watching GBP USD here, and what I saw was a clear breakdown of a range structure right here. And I was then thinking, okay, well, if we come up here and we see a rejection, I'm going to watch this as a distribution range and potentially move lower into like this area right here. There's I view kind of like I see a gap here, right? And then maybe you add a fib here, and you're going to see that you might have the reload zone down here, which I quite like. So that's the overall structure I had for GBP USD, and I was waiting to trade that. But now, if we fast forward to the current price, what we have right now is the first initial rejection of the range lows as resistance, and then a sharp move to the downside. Everything looks good for that potential move and continuation to the downside. But then what happened was we formed a higher low, or we can also view this as a double bottom or a slightly higher low. And then we broke above this one, and we are now back inside the range above that level and above that level. We still, of course, have some type of resistance area here that we're testing, but this, I believe, should be fairly strong support. So I'm not able to short this because I feel like there's a lot of strength coming in here, and we're actually moving up. So I'm not really interested in shorting this unless we perhaps, break this area right here. But then, like, if we break this level, we're still going to have the possibility of having like this structure. So to me, there's a lot of conflicting ideas here for GBP USD, and that's why I don't have this on my short list. I don't have any alerts on this. I'm not really interested in trading this, basically. So it's yeah, what's your view on that, Dirk?
Yeah, I tend to agree with you. Same thing probably you have been saying now, like packaged in other words. If I just look right now at the daily level of cable here, then I would come to the following conclusion. I would think like, okay, we've entered here kind of like a mini downtrend characterized by the series of lower lows and lower highs. And we've seen this pullback now to the 8 weeks moving average, which I always like to talk a lot on the daily charts. So we naturally should see a continuation to the downside. Now comes the but, because I don't think it's wise to analyze cable just by itself. We need to get a broader overview of what the euro dollar is doing. And if we talk about a broader overview of a euro dollar, of a US dollar, sorry, we should look at euro dollar. So, and on euro dollar, the picture is a little bit different. In euro dollar, we are in no man's land, really. If I look at the 8 weeks moving average, the bull market or bear market support bands, however the structure is, we can clearly see we are in this extended sideways range yet. And until we drop below 114, or until we go above 1930, there's really no direction here. So you could play something like contrarian trades maybe here if you use something like the RSI that might work actually at the moment. But I think without euro dollar sending a clear signal that it also wants to deflect off the zone here and go to the downside, I have a hard time believing that immediately we should see a cable also going to the downside. I mean, one tends to lead sometimes the other one. It always flips. Sometimes it's cable leading euro dollar. Sometimes it's the other way around. But I wouldn't be, at least for the next couple of days, be surprised to see a picture like this where we kind of start trending also sideways in a more narrow range in cable until we get a clearer picture what the US economy is actually doing, which we are not getting so much at the moment due to some of the important reports not being released. Are we getting this week? We have ISM coming out. If it's coming, then who knows? And we have the core price PCE. That one could be interesting, but still, it kind of like the sideways range, narrow sideways range would also indicate really the undecisiveness of market participants at the moment, because we all hope for, that we get economic data again, that we can see a clearer picture of where at least the US economy is heading. Now we don't still have that, and this is like the worst thing as an institution investor you can have, because you don't just want to rely on technical analysis where you want to know like, how is the economy doing? What is that telling me about the upcoming months in terms of forex rates, for example? Really a unique situation like I've never seen it before, honestly speaking, in the last 26 years. Which shows you, always faced with new situations when it comes to trading.
Yeah, and that's very important. It's the same with, and you've been looking at algorithmic trading. You've made indicators and probably tested it in TradingView historically, and maybe MetaTrader as well. And you see that some strategies are very good in certain situations and then very bad in other situations. Like, for example, you can have I've tested a few strategies, and I've seen that a few strategies that I have might be break even for 5 years. And then it has like a 2-year stretch of being super, super profitable. And then it goes into drawdown period or break even, which gives me a end result of a strategy that is on paper not very profitable during the last 20 years. But if you select a certain time, let's say during COVID, it's like super, super profitable. And I think that also is the same with our discretionary trading and our systematic trading, our manual trading, right? We're going to have periods where let's say you're trading the gold to the upside. You have developed 2 years ago, you developed a 15-minute break and retest strategy right on gold, and you've seen that for the last 5 years, gold has been generally very bullish, right? So you've had a very good period where you've developed that strategy, and then eventually you go into another market structure where, and then that stops performing. So what do you do then?
That's why it's always important to test your strategies on different market regimes. Is it working in the sideways markets? Well, if it's a trend following, probably not. Then it's important, how is the drawdown there? As an example, one of my go-to Bitcoin trading strategies that I've extensively backtested, where I have a lot of data on, is like this. It's insanely profitable long term, but you have period which always last in general 6 to 8 months, sometimes a whole year, where you are on drawdown, where the strategy loses something like 20, 25, up to 30%. And it's hard to still, trade this strategy during these times, because it's hard to be in a losing streak for like 8 weeks, for example. You have to keep, it's a really good example of keeping in the back of your head long term, this is going to be profitable. This is why I like to trade strategies like this automated, because I don't always need to look at it. I force myself to not look daily at it, to maybe once a month or something, like just to check, is everything from the technical side still working, and then see like after a year, how has it done really. Obviously, also not trading something like this with like super much money. You don't want $1 million in a strategy that you don't check regularly.
Yeah, I've had a bit of a pause in my algo development career, but I'm definitely interested in going back, focusing a little bit more on it, because there's so much potential with it. It's just basically timing issue. I wish we had more time.
Yeah, I also would like the 8-hour day, actually. But it's the thing, like a lot of people think like algo trading bots are like this one-click solution, that's going to earn you endless money. And it starts really with when you develop the trading strategy and you backtest it. There are so many crooks and ninnies that you can screw on. Like, what is your risk management, for example? Where do you set your take profit? Is it a dynamic take profit? Is your stop loss a trading one? Is it a dynamic one? Or is it maybe something that adapts to the current ATR? Because your strategy you want your strategy performing the same in different volatility settings there. So there are really thousands of things that you can look at and analyze it. It's far, far more than just the simple question, is my strategy profitable or not? And I think this is also the reason why people quickly give up on algo trading. Not only because you need to put a lot of work upfront into it. It's not easy, to first of all design the trading strategy and then get the backtest right. Doing the backtest, there's a lot of stuff that can go wrong as well. Your data is skewed, which is, for example, with TradingView, a lot of times the case. You don't want to rely too much on the data. You need clean data. You need processes to clean up the data to make sure it's clean, that there are no hiccups in the data. And, the list goes on and on. I probably could do like a 10-hour course just on cleaning up data and how to question yourself if the results you are seeing are realistic or not. Fascinating topic, but not for everybody.
Fascinating topic, and also can be very boring if you don't like the process.
Boring? It's data, man. It's so exciting. I love it. Terabytes of data that I can dig through.
Well, I like it when you see results. We have a question here from the audience, a comment asking the system that I shared on Friday. Is Euro NCD a buy trade? I think it's not a sell, that's for sure. But I think we're looking at Euro NCD here, and this is on the on the daily, and we have reactions to the 50% here. We see a wick below, we have wicks below, and here we actually have a daily open and close below. So here we are seeing some potential change in structure. If we go long here, then that's going to be resistance. I'm trying to see what is the behavior of the previous trend. We had a long here, and that was also resistance, and then a long here. And so I'm not looking at this as, and I just released actually a video on this right before going live here on this exact trade right here. So it's pretty cool that you caught this this idea. Very very nice. Is this a buy? We are in the area of interest, absolutely 100%. What I'm going to do for Euro NCD is I want to wait for this daily candle to close, because a lot of things can happen in 11 hours. So this daily candle is going to close in 11 hours. And this candle right here, the fact that we have the wicks to the upside after testing the daily 50 EMA from the downside, so this is the Friday candle, this is a rather bearish development. You have a strong bearish candle, gap up, a continuation of that bearish momentum, and the next candle closing the week very bearishly with an upside wick, telling us that sellers took control of the market leading into the end of the market close. Now, imagine if this candle closes as a bearish candle, then we're going to have a very bearish candlestick structure right here. So I want to make sure that this is actually a bullish candle. We have a small little gap up here, but if it closed down here, that's going to be very, very bearish. Now, looking at the 4 hour, now if you want to enter this today, not based on a daily candle, which is not recommended, but there is, of course, the 4 hour structure here that looks more like this. And then you have a neckline here. You can look at this as a potential break of structure. And you might come up like this and then retest that level, maybe exit the reload zone. And then that would definitely be a good long opportunity. So let's go to the daily here. And imagine you enter on the 0.618. And I think we have could have a pretty good, fairly tight stop loss right here, somewhere around that area. And then what I would do is I would probably exit this trade up around these highs for 2 hour. I really like that, right? I really like that because I do feel like the trend is losing momentum. But then if you're holding this long term and you're thinking Euro NCD is going to continue to the upside, then this level up here turns out to be a good resistance level, a good high time frame resistance level. That's at the minus 0.236 as well, aligns with the weekly resistance level. If we follow this horizontal level all the way to the left here, you can see that we have marked out on the weekly the level that I have marked out as resistance is basically this level right here. So let's zoom out, and then we're going to move this to the left, and then we go into the daily again, and we look at the current structure that we have. I need to make that weekly level visible on the daily as well. So we go to visibility, all intervals, and then we go down to the daily, and here is that resistance zone that's a high time frame resistance zone. It might even run up to the minus 0.382 for a pretty good risk to reward trade. But of course, that's going to be, you're going to be holding this for longer, and the more time you're in the trade, the more risk, you're exposing yourself to that market for a longer time period, which adds risk. So the question is, so this whole analysis was based on this question here. And the answer to your question is yes, I think we're getting close to good buy trade on Euro NCD. Of course, not financial advice. Another question here, very interesting question, is which one is good for beginners, algo or discretionary trading? Discretionary trading, of course, because algo trading, you have to know a lot about trading to know how to create an algorithm. So I would, of course, say yes, 100% discretionary trading is better for beginners. But if you have an algo that's profitable, that's best for everyone. It's not like you're going to have a profitable algorithm. It's like, oh, it's so difficult to trade this. It's so difficult to trade this algorithm. No, definitely. Algorithmic trading is not something you're going to start doing as a beginner. Absolutely not. Dirk, does auto trading work accurately? I don't know what he is talking about, something specific or just algo here?
Well, it works accurately if you tell it to work accurately, if you program it in a way. I'll give you an example. A while ago, I thought I found a crazy profitable strategy. And I tested it in any way possible that I thought possible back then, and the results stayed the same. So I attached it to a smaller account and said, like, I'm just going to let this strategy auto trade. What I didn't see at that time, for whatever reason, because of my dumbness, really, my idiocracy back then, was that the signals that were the foundation for this algo trading strategy didn't, in the backtest, didn't take into account the closing price of the candle as in price entry, but the actual physical space the signals appeared on the chart, which for long trades was like, in terms of Bitcoin, always like $500 lower than the current Bitcoin price. For short trades, always higher. So you always got a entry like $500 into your favor already, which of course led to many, many signals that normally would have been losers being insanely profitable. And I thought I was smart because I told the system, like, count in like $50 of slippage in any trade, count in very high commissions, very high financing fees also, and it still was insanely profitable. And I put this strategy live shortly before I went on holiday for 2 weeks in August. That was on a 10K account. And I didn't look at it. And when I came back, the 10K account was down to 3K, which like doubted myself because that was not at all in line with any backtest. And I thought, like, oh, well, that was a very expensive holiday then. I hit this, and then I noticed my mistake. And that's the problem with algo trading, backtesting. There are a lot of little traps, little mistakes that you need to pay attention to that can go wrong. And if you're new to this, that will go wrong. If you have more experience in trading, however, you will very quickly find out, like, oh, okay, this is the reason why it went wrong. So it's a costly mistake. But like with everything in trading, I always say, if you make mistakes and lose money in trading, it's educational fees you are paying that otherwise you would have used for other stuff. So I'm still angry about myself because I think, like, how can a mistake like this happen to you? But I can guarantee it's the only time in my life this mistake will happen to me. So a lot of things that can go wrong. That's why if you're a beginner trader, in my opinion, it's very important first to understand the fundamentals of how markets are moving, how to identify, are we in an uptrend, sideways trend, downtrend right now? That at the very least, also understand how are prices really discovered. How does it work when you trade not only a forex pair, but something like a stock or something like a cryptocurrency? How does this price discovery really work? That you understand that it's not like some CEO of a company saying, like, oh, this is right now, this minute, the price of euro dollar or something, but to understand supply and demand in a nutshell. So you need to get the foundations right before you can think of something like algo trading. When you learn a language, you need to know vocabulary, you need to know basic grammar rules before you can actually, with confidence, starting to speak the language. You'll still have, even if you don't know that, the occasions like where you can communicate already a little bit and make yourself or get like locals to understand what you want or what you need. But that doesn't mean you are fluent in that language or at a level, that can let you have conversations. And it's the same on the market, in my opinion.
Yeah, I think we had a comment as well saying that algo development and everything, it's difficult. It's not that a quick fix that everyone is
like you said at the beginning, trading is difficult no matter from what angle you approach it.
Yeah, definitely. And I also think you have to understand that algorithmic trading is just like normal discretionary trading or systematic trading. It's as difficult. I mean, it's much more difficult to develop a profitable algorithm than it is to develop a profitable discretionary system, because you have already developed your brain, basically. Like with an algo, you have to develop the brain from nothing, which is very, very difficult. But when you have a profitable algo, it's as much work as with. So it's not about okay, you pick one, right? But the beautiful thing with algorithmic trading is that you can have an algo running while you're trading discretionary or while you're managed trading, but you still have to monitor the result of the algo. You still have to make fixes often, and so there's going to be I believe the same amount of work. It's just about what do you want to do? Like, what's your personality? And I think for me, one of the reasons that I want to focus on algorithmic trading is because I have a fairly decent knowledge in technical analysis. But honestly, I feel like it's cool to see the trade being executed automatically. It's really nice to see in MetaTrader that something is working without you, but it is very difficult. It's really really difficult to understand how to monitor and how to fix and how to. Yeah, it's very very difficult.
I think you also have to approach it from a entrepreneur, from a business side of you, to develop from the scratch a good algorithmic trading strategy, even without the guarantee, as we just saw in my example, that it becomes profitable. It's very often that I invest something like 100 hours into this, like development, coding, back testing, adjusting, going back and forth, optimizing, and so on and so forth. Now, if I take into account, like if I would use this time, like 100 hours, with somebody like outside, for example, if I would do a contract work for somebody, if I like sometimes I get banks approaching me that want my opinion on certain things or even want me to develop some stuff from them trading wise, I normally charge them something like $120 per hour. And
Yeah.
if I factor that in, I could have spent 100 hours times $120 an hour for somebody else. Then there's a lot of, I call it cost of opportunity, that this algorithm that I developed needs to catch up in order to be worth my time. And you should do that for yourself as well. That was an arbitrary example now, of course, by me, but take this into consideration. It's not like I press one button and then all is going automatic and I'm going to be rich next week. If you do it by yourself, there's a lot of work, a very steep learning curve, a lot of things that can go wrong. Like I said, like with everything in trading, it's hard to get to that goal of consistent profits. And then again, this algo trading strategy is not going to be your only go-to thing. You don't just want to rely on one algo strategy with all of your money. Yeah, it's going to be a part, ideally, of your portfolio of trading, a small part.
We have a very important question. Well, I guess it's not a question; it's a statement. So this viewer has been asking for advice and asking for trading systems and advice on how to make it. So apparently lost 3 accounts with the 5ers and still hope that will be successful one day, but I don't know how. So first of all, I think my question to you is, do you have a trading system? That I think that's an important question, you know. And when I say trading system, there's a few different types of trading systems and different approaches here. So the first approach is to have a systematic trading system that you're trading manually. We're not talking about an algorithmic automatic trading system. We're talking about a systematic way of trading. That's system 1. And then system 2 is completely discretionary, where you make up your mind if you're going to take a trade or not based on what price action is currently doing and based on all the knowledge that you have in technical analysis. Doesn't have to be a very specific yes or no signal. But what I do recommend is that you need to start with, first, if you don't have a trading system, you stop trading right now. Stop trading right at this very minute and learn technical analysis. If you don't know technical analysis, then learn technical analysis first. And when I say learn technical analysis, is do a basic introductory course to technical analysis. There's a bunch free ones on YouTube. You can check out my webinars that I've done for the last few weeks here at the 5ers, covering market structure and things like that. I'm going to be continuing doing them on a bi-weekly basis. And then you can get a book like the one we talked about, Technical Analysis of the Financial Markets by John Murphy. And then when you have the knowledge of technical analysis, you will start to have ideas. Like, for example, a stochastics RSI bull cross together with a bullish engulfing candle at support. That's an interesting idea. Now let's go out into the market and now let's test every occurrence of that signal. Do you get at least a a bullish reaction after a signal like that. And then you test that and you say, okay, 75% of the time it gives me a bullish reaction. And now you have an entry signal. The next step is to figure out stop loss placement and take profit placement. And if you find something that you've seen through TradingView using the replay tool in TradingView and gathering the statistics, can in the beginning just be a simple yes or no in a spreadsheet. Go back, look at the last year for whatever market you're trading, and then see if it's profitable, and then expand that to maybe 10 years. And then when you have proof that what your idea is profitable, then you demo trade that for 3 months. If you're profitable for 3 months on demo, you go live. Okay, so that's the process you have to follow. And I feel like most people they start trading live and then they want to learn technical analysis.
Yeah,
But
it's because we are programmed to like immediate results, not because we are stupid. This is just our ingrained into our human biology, in my opinion.
Exactly. I mean, it's like you want to become a doctor. You're not going to go and operate on people before you learn how to
learn it.
So, let's cut this person open.
What's
It's
the
like,
worst thing that can happen?
Is that a heart? No, that's the brain. It
ChatGPT
doesn't
help
work
me.
like that.
Yeah.
It doesn't work like that. So you have to take this. You have to have a very professional approach to this.
Yeah.
When you call someone to fix your house, to put a new roof in, you call someone, you put a new roof in, and you expect that person to know how to put a new roof on your house. It's not like, oh, hello, never done this before, but let me start building your house and then I'll be learning along the way. You're not going to pay that person. You're not going to hire him. But why would you hire yourself in the markets? Treat trading as if you would be getting paid for it, and you don't want to lose your job.
Yeah.
It's
But by the way, I mean, you say here, for example, oh, I've lost 3 accounts in the 5ers, sounds like, oh, I'm set, I lost those accounts, still hoping to be successful. I mean, what a beautiful position to be in. Of course, you paid money for those accounts. That's a given, but you didn't lose your own money. You tried yourself first with an environment where you don't lose a 5, 10K or 100K account of your own money. And even like spinning this further, the beautiful thing about this is the one day where you are successful and you pass the evaluation phases and you actually get a funded account and you're maybe able to grow this funded account also to new levels, you immediately have a source of income. I mean, it cannot be. I really wished there would have been something like this when I was young, but prop firms back then were not around. So I had to risk my own money or the money the bank I was working for and go through all the stuff my boss would say to me in the beginning when I lost some money in trading. So really treat it as a chance. I think, using these accounts, losing these accounts, this is really very reasonable educational money. We're not talking about thousands and thousands and thousands of dollars of your own money you risk, even if you buy the biggest account. What is the price tag on this one? Like
the biggest account, I think it's 800, 600, something
so
like that.
let's say like 800, it sounds like, oh my God, that's a lot of money. But still, in comparison to what I've seen other beginner traders lose, because they right away risk their own money and lost like 5 or 10K. If you lose 10K, that's a lot of, 250K evaluation accounts you can buy out their boot accounts, I would suppose they are.
Yeah, so, I mean, I've spent tons on education, but then when it comes to buying an account, I'm like,
And at the other hand, people say like, oh, this guy looks trustworthy. I'm going to spend 5K on his course.
Yeah, it's like, do you have a track record? No. But I trade live. You can go and watch
Trust
my
me, bro.
TradingView lives.
I'm going euro-dollar short and long at the same time, and then I'm going to just share in retro perspective a trade with you that succeeded.
I think that's a good time aspect as well. within 5 years, I think that's a decent amount of time. A lot of people that become profitable in 1 year, 2 year, 3 year, but it's not about becoming profitable. It's about staying profitable. It's about being profitable when your system stops performing. That's really the test of a trader. And it's, for some people, depending on in what market cycle they get in, and in what cycle of the system they're trading, you might see that you've developed a system, and then you're quick to get to consistent profitability, where you can say that, okay, I made 1 to 2% on average for the last 6 months. Okay, I would say you're now in the realm of profitability. But then fast forward 3 years, and now you're consistently down. What do you do at that point? If you're able to get back to profitability, then congratulations, you are now a consistently profitable trader, in my opinion. Because it's really, a trader's career goes through cycles, and there's a few of these cycles I believe you have to experience before you can really be sure that you are the type of trader that you need to be. Anyway, we have M76BB have been asking quite a lot on gold. He is asking because he wants to go long on gold, and basically asking us, is it a good idea to go long on gold? I think it was a better idea to go long on gold here. Okay, that's that is my honest opinion. I know it's very, very easy for me to say that, but would I go long on gold here? No, because I'm not a momentum trader. If you are a type of a momentum trader, though, then you may be looking at this and you're thinking, wow, that's got some decent momentum here. We want to see maybe the RSI and the overbought territory here. Yeah, but then like on the, let's say on the 4 hour, yeah, it's nah, I would want to have the RSI higher, honestly. Like I want to see a big, like if I would be trading this to the upside with that momentum, I would probably want to see RSI a little bit higher. It's a difficult one because we might as well. What I'm trying to say is, gold long is gone. I think you'll have to wait for the next retracement to go long on gold. Going long on gold here, I feel a lot of people are feeling FOMO. A lot of people are probably going to be entering gold here based on FOMO, and then we're going to get a move like this down here, and then maybe back up, and people are probably going long here, and they're might be looking at that wick as a stop loss level, maybe a wick here as a stop loss level, and then price comes down, hits that trend line, and then continues higher. And that's why I trade on the daily, right? And that's why I move my stops up with price. So my initial stop loss was here, and now my stop loss is here, which leaves a lot of room for a daily retracement, all the way down here, if I'm honest. And then I'm going to be moving my stops up higher if we form a higher low and then push higher. I want, like, when people come into the live stream and they're like, "Oh, can I long gold here?" I want to go into the lower time frames and I want to like help them, but it's much easier for me to say is, in my honest opinion, I think the move today might be difficult to catch.
Yeah, and I'm always afraid also to that they are maybe in a position that's not good for them, or like you said, they missed the entry right now, and they want to get confirmation from experts, to kind of offset also the fault if a trade is not going into that direction. Then, which I'm not saying whoever made the comment and asking about this right now that you are doing this, but this is a pattern we see quite frequent amongst at least beginner traders, which is totally human and normal as well. Again, the way I see it is, and maybe this is going to help you to answer, at least from the perspective of a daily chart, these questions like this. I've been saying now for weeks already that if you aggressive want to swing trade gold on pullbacks, you can enter at the 8-week moving average, which is the blue line. Simple moving average, 8 weeks. See how beautifully that held again. If the price closes well below the 8 weeks moving average, there's a likelihood that it's going to pull back all the way to the bull market support bands. Bull market support bands, this indicator, type it in TradingView. If you're using TradingView, bull market support bands, you're going to find it. Those are also normal moving average, but since there's a ready-made indicator, always nice to use this one. So the trading setup, if you want to swing trade gold to the upside, is you either enter here when we touch or are trading around the 8 weeks moving average. Now, this is a daily chart, but a weekly moving average. That's important. You can change that on TradingView down here, multi-time frame. 8 week, the length 8, simple moving average, and time frame 1 week. And then you put your stop loss a little bit below the 8 weeks moving average. Not like super narrowly, because as we can see, the price likes to spike also to the downside. But like, for example, like here, if it would close here today, we could safely say, well, it has violated this strong trend pullback from the 8 weeks moving average. So the likelihood of it moving down to the bull market support band is very, very high. And if I zoom out now, you'll see how well in a trending market, not only for gold, this comes actually from trading Bitcoin long term. Once a trend has established itself, how well this is really performing. Every time, if you don't want to trade it aggressive, every time we pull back to the bull market support bands, those were long-term great areas to enter this. And I think this is an example also in how important it is when you're a swing trader to stay patient from now on then, and not to get a severe case of FOMO because you missed out and then suddenly gold started jumping up on Friday and you kind of feel like you missed the train, so you need to get on it. Be patient. Of course, there is the possibility that it's going right away higher and making higher highs above the next high, but then there's a chance again which will put the odds more on your side, because then you'll have a structure like this, that this is going to add a support. So what you want to do then is either you trade the breakout over this pattern and put your stop loss under it, or you wait for a pullback, which gives a very favorable R for you for your long trades there. Stay patient really there, but you also need to be able to pull the trigger, which is difficult, if you're a swing trader in a highly volatile asset like gold. When you see a move down, like we had here, for example, down, when you see it, it's approaching the 8-week moving average. Oh, no, but I have to wait, It's going lower. It's a kind of protective mechanism. We see that very often, especially in cryptocurrencies and something like Bitcoin, that you suddenly see all those comments from so-called expert over social media. No, it's going lower now. You should buy when it reaches 3,500, 3,700, but it's never going to reach that. Even if it does, it doesn't matter, because the risk-reward ratio for a trade like this over the course of 100, 200, 500 occasions like this is going to be in your favor, because it puts you in the beautiful spot of being able to do something like this, to enter a long trade here and say, well, the pattern I've seen here is that once we break under the 8 weeks moving average, we are probably going to see a drop all the way back to the bull market support bands. So I'm going to put my stop loss maybe somewhere in the middle here. But I know from the last high that I have a lot of upwards momentum, that if this line holds, there's the chance of us trying to attack the last highs again. So I want to put my take profit maybe not at the high directly, but slightly under it. And look at this. You suddenly have a risk-reward ratio of 5.5. These are the trades you want to do in swing trading. They are not occur that often. That's a given, and you have to be brave for trades like this. Even if you dial it down a little bit, let's go down all the way to 2R, for example, on this trade, which still is something, that is long-term very favorable for you, then it looks better. If you ignore the whole structure on the right here right now, that of course gives us confirmation, or gives me confirmation for what I just said, but it's like it's a given, but you have to be brave to pull the trigger. If you ask your question, am I late to the game? If you ask yourself a question, am I late to the game? Normally the answer is always yes to that. Because you don't want, like, I think was it Warren Buffett? No, it was not Warren Buffett. Rockefeller or whoever said, like, you want to be buying when the blood is on the streets. And that's for sure the case for gold. It's not true, for some more dubious assets like, altcoin number 5,450 according to market cap, but has like a market capitalization of $1.50. But for assets, and I mean, we're talking about the largest asset in the world according to market capitalization outside. I'm talking about assets that are liquid now, which gold is. So not taking into account something like real estate, you can be very, very sure that other market participants are looking at levels like this again. And if you see bounces like this, that means they were braver than you, because they knew, hey, I have a great chance of 2, 3, 4, 5R in this trade. And even if I look at 100 trades with an R like this, chances are very, very high that I'm going to earn money long term with this. Yeah, this being said, for gold, I know it's like always, especially in hindsight, easier to say this is how you should do it and to actually execute it. And believe me, even after such a long time that I've been doing this, it's still hard to pull the trigger. As a matter of fact, I didn't pull the trigger on this trade because I don't swing trade gold long, but or gold in general. But when I see things like this, where despite all my drawings that I put on here now, where we see this pattern holds up to the test of time over and over again throughout the whole of this extended bull market that we've seen in gold since, I mean, we're talking about 2 years right now. This is really where I always say to myself, my God, trading can be so simple, but then again, not simple, because you have to be so brave to pull the trigger at the right time when nobody else wants to do that.
Yeah, that's the thing. That's the thing. Trading can model. Hello, what happened there? Oh, someone's in the background. I think that's Will or Richard. Well, maybe we should just bring them on. You guys ready?
Oh, it's already 12:30. My God.
Yeah, it is. It is. All right, welcome, guys. Welcome.
Yo,
Welcome.
sorry about that. That was my
Hello,
bad. I
hello.
was trying to get the chat up, and then I pressed the wrong thing. I was like, "Oh shit, no, wrong one."
And I see a new background with a lot of light.
looking good.
Wow.
You reckon?
Nice.
Good.
What do you think, guys?
Yeah, nice.
Beautiful.
Welcome to the world of professional streaming.
Well, yeah, yeah, mate. Literally, that's what it is. No, I was looking at it, and then, do you know what it was? I watched back some of the trader interviews. So for those of you who don't know, I do all the trader interviews for the 5ers now, and I was watching them back as the guys were sending me like the finished product, being like, we're gonna post this now, and then I'd look at it and I'd be like, dude, that looks awful. I was like, that looks so bad. I was like, and then like some of the guys who I'd be interviewing had better backgrounds than me. My brother said to me, he's like, Will, you look like you're like streaming from a prison cell. I was like, I need to sort this right out. So I actually, me and the missus went shopping yesterday, and I bought just everything. Like I just full dead ass went to town on all of like shelving, LEDs, stuff like that. So like some of the stuff, like, I got like my books up there, I got my boxing trophy there, I got my clock on the wall, some photos of me and Cece, and then like where I've been. So like I've got Greece, Rome, Paris, and then I got the globe and just stuff like that. So
It makes me feel better, man. Like even my desk, I've modified my desk slightly, and just I feel like I'm a bit more professional in my setup now. So you got to have a good working environment to feel good as well. And dude, like I was so excited to come to work today. I was like, oh my god, yes, I get to go into work and like know that my office looks like I know what I'm doing, not just my trading setup.
No, it looks great. Looks great, man.
I appreciate
How
it.
you guys been? How's your weekends been?
Good. I mean, the weekend was weekend. It's boring. No trading. I had overnight. Well, I had weekend holds
Oh, you
on.
mean you don't trade forex over the weekend, no?
Sometimes. No, I don't trade crypto, so I don't trade at all over the weekend. And then I had some weekend holding on the NAS and US30. But I was $400 up, but now I'm $100 up. So.
I was just about to ask you because I also had a weekend holding since actually last week, Wednesday already in the NASDAQ, which I paid crazy amounts of swap for.
Yeah.
But I flipped it into a long position this morning actually.
Oh, lovely. On what asset?
On NASDAQ, yeah. So this was
lovely.
since when was that? Sorry, there were several flips. So this one exactly last week Wednesday, I went short, went long here, lost money on the short, lost money on the long, earned some money on the short, and now am around take profit on the long here.
Oh, nice.
Because I finally automated this one, as I was telling Jonatan. Finally, I finished my homemade coded bridge between TradingView and MT5.
Ooh la la.
Nice.
Go on.
Fancy. No more
guys, I've got
$80 a month for some dubious trading services.
I'm gonna have to jump off, and I'll let Richard and William take over here, and I'll be back in a few hours later today for some more trading. And yeah,
Awesome.
See you guys later.
Nice one, Jonatan. See you later, bro.
Yeah, I'm going to join that one as well. Take the opportunity. So have fun, guys. You guys out there and gals out there, remember to leave a like, subscribe to the channel. We're at 91,000 subscribers now.
Yeah, that's pretty cool.
That's pretty cool. There's still this chance we're going to reach 100K until the end of the year.
I think there's a chance.
I think there's a chance. I really think there's a chance. So if you haven't done so, also subscribe to the channel. We appreciate that very much. And I'm going to leave you now in the more than competent hands of Richard and Wilhelm. Take care.
Dankeschön, Dirk.
Bye-bye.
Thank you very much, Dirk. We really appreciate those kind words.
See you later, my man. Have a great one, Dirk.
Happy Cyber Monday, mate.
Yeah, cool. Yeah, Cyber Monday, isn't it? Yeah.
Dirk saying that he needs to go and shop something quickly while it's still Cyber Monday.
Dude, that's a fit, but I may see if I can go shopping for some more stuff as well. I wonder what else I can waste my money on.
It's not going to be a waste.
No, to be fair, like you guys can see
future development, mate.
How much of a difference
you're investing in thyself.
Absolutely. Well, I mean, I'm investing in my setup for when I get back. So as you guys know, I'm going away for a few months in January. I was going to wait till I get back from Hong Kong to do all this, but then I thought to myself, actually, I'm just gonna do it now because when I get back from Hong Kong, I'm not gonna be in the mood to, revamp my setup. So at least like when I get back, I'll come back into my already professional setup, and I can be like, oh, just that sigh of relief, that breath of fresh air.
Dude, how does this feel? Like you just got that setup of yours, like nice, exactly how you want it, and then you're gonna have to leave it behind for like 6 months.
Bloody heartbreaking, mate. Like, honest to God, it's heartbreaking.
So sad, mate. It's just like, look how beautiful my background is. Shame I have to leave it.
Yeah, well, literally that. I was literally that. Like, I was showing everybody. I was sending videos to like the group chat. I was sending videos to you guys. I was sending videos to I was showing my brother. And I was like, look how cool this is. I wonder if I can take it on the plane with me.
You're just sitting there at the airport with your whole shelf just in your hands.
Do you reckon I can
monkeys and everything
turn it into a green screen? That would be. I mean,
if you've got a green screen, you technically don't need any of the stuff. You can literally put on that green screen whatever you want.
No, I don't want that though. I want this. I've spent money on that.
Take a photo.
Hard-earned profits went on that. I want to take it with me. Oh man. No, it does. Yeah, no, it does look cool though. I'm super gassed with it, and I've even put like the LEDs. Like I've had LED strips for years, but I've just never used them. So I've like, yeah, well, that's you inspired me, mate. You inspired me. Like I've always thought to myself, like I want to put my LEDs up. I don't know where, and I don't know how it's gonna look. So I like ran them across the back of my couch. I don't know if you can. I don't know if you can see it. Okay, in fact,
I can see it, mate.
I wonder if we go here, because I accidentally clicked this button earlier. Yeah, no, I know. I accidentally clicked this button. Now I realize that I can use it and it works. So there we go. Like that's my office now. That's pretty cool, I think. It sets a vibe. It sets a really nice vibe. Like even in like being in my office now is a happy place. You know, like I spend so much time in here. I kind of feel like I'm enjoying being in here now, whereas before it was a very cold, empty room.
I'm gonna do the same, not the same as you, but like the same idea of like revamping my office. So I'm going to turn my whole desk so that I'm facing that way, which is there's a sliding door over there. So nice big open area where the sun can come through and can like straight on my face. And then obviously I can use not this wall over here. I can use with all of the paintings, which is probably what I'll keep using. It's the paintings, because my wife made this. So
Dude, that's super cool as well, man. I can't show you, but I bought
I'll get stoned to death if I buy a painting, mate.
Yeah, 100%.
I'll get stoned to death.
I'd stone you if you bought a painting, because like I wish I could have handcrafted paintings on my wall. I had to buy like a colourful gorilla yesterday, and then turns out it doesn't fit on my wall, so I had to put it on my other wall. I was like, yeah, I mean, it still decorates my office, but you guys
it's nice for you to look at.
Yeah, exactly.
Every time I come into the office, I've got a lion over my shoulder, you know?
Yeah. Yeah, and the fact that your wife made that.
I have a koi fish for luck over here.
I have...
I'm struggling with the mirroring effect.
That's my luck. Yeah, no, I know. Same as that.
Here.
I did that earlier, and I was like, oh yeah, I got my boxing trophies over there. Oh, wait. Yeah.
Anyway, mate. I went to go and get a haircut.
I know.
Got rid of all of the incredibly long hair, so now I have my normal size hair.
I'm all hot and bothered over here, man. Like, damn, son. No,
what did I miss while I was gone? What's been happening in the market? Because I left this morning straight after our morning stream. Now, and I'm seeing GU is still doing GU things that we don't care about.
Yeah,
Euro is still slowly building its way up higher. If we just look at EU, I've once again I closed everything and removed all of the markings that I had initially. But will remember this morning that I had a area of interest at the bottom of Tokyo for this bounce over here. So while we were having our morning stream, these were the two areas that I thought, okay, listen, we need to see price either break one of these two to kind of decide where it wants to go. Price was slowly moving its way lower. I did like the fact that within the Tokyo session, the EU price broke above the Friday high, which is a good sign for me, especially if there's no follow-through pushing lower. So if this was the only downward push that we had from the top of the Tokyo session to the bottom, that's great. You would see that on this movement over here, whether or not it holds true. No attempt to push lower, really. Price then, as we exited Tokyo, started pushing higher with some volume. Volumetrically, this is on the 5-minute. If I'm on the 15-minute, you can see it nicely as well. Very nice upward push, strong. It's a strong attempt. We broke the Tokyo high yet again, so it's another confluence that we're going to carry on pushing higher. We've broken Friday highs. We've broken the Tokyo high. It wants to go. We have a bit of a pullback and then a continuation. So this is exactly what we wanted to see this morning. We wanted to see EU push higher, and so it did. Question is, where are we aiming for? Where can it go? So what we do is we go on the hourly, we go towards the left, because that is the earliest price action that we have above this point will be on the hourly. Like it's the first area that you're going to see as an example. And what we have here is we have this very ugly wick and then a strong candle into and then just an absolute sell-off. And this was the point where we really started to sell off on EU. And this happened to be Friday the 14th, not to be confused with the 13th, which is a very bad Friday. And anyway, so that is the area that I would be aiming for, and that is 116.48 to 116.56. So I'm going to round that down to 116.50. So that is an area that I would like to see tested. The reason why I'm saying that that's the area I want to see tested is because this area over here, where we had an attempt to try and push higher, this little box of mine was already disrespected. We're already trading above it. We've already wicked above, and well, right now it's being rejected, but you've already closed above it. So I want to see whether or not price can carry on going up this way and go and test that little box area of mine. I think we can. I honestly think we can do that with EU. So EU, to me, I have a, let's not call it a strong bullish bias, but rather I'm inclined more towards buys than I am towards sells. I would love to see a bit of a retracement. If we can, for argument's sake, have a 50% fill on the fib be filled, a 50% retracement on the fib fill. That sounds a little bit better.
I know. I do the exact same every single time.
Somewhere over there. So this price would be 16.14 to 16.10-ish. So let's say 16.12. If it can drop to 1.1612, I would love to enter there for a potential buy, aiming for this upper end for 16.50, give or take. That's what I'm looking at the moment.
Yeah, Euro. So we after our conversation yesterday, I totally agree with you when you mentioned about the Euro, because I was looking at it and I was like, the Euro isn't actually that. Sorry, the pound isn't really that nice, whereas the Euro's been moving a lot nicer recently. So I've been looking at them, thinking, you know what, I'm just gonna stay out. So I'm currently in gold on a gold buy at the moment. It's probably an A setup. It's not an A plus setup. It's a high risk, so I've risked low on it. You know, I've only put a 0.15 lot on it, but it is due to the fact that it's a less probable trade than I want it to be, but it's still a highly probable trade in my textbook. So that's what I'm currently looking at the moment. I think I want to see a higher price. I don't want to see gold sell off yet, I don't think. So we'll see how it goes. I've just got my chat box up. I managed to find my chat box. I was being an absolute muppet. So let's have a bit of a catch up with chat and let's see what you guys have to say, y'all. Don't know why I went American then. Unbiased Trader. Good morning, Richard and William. Yo, what's good, my man? How you doing? The 5ers channel super good. So true. Absolutely. The 5ers are the best. No doubt about it. Your background is awesome, Will. Thank you very much, Vinny. I love it. I'm obsessed with it. It took me hours and hours, and I got my shoulder's killing me. I think I knocked my shoulder last night while I was like editing around my desk. So I got a bigger desk and it's more sturdy. My monitor just fell.
Did you just it's more sturdy and then you knocked your camera?
Well, no, I went, it's more sturdy, and then my monitor just went. I was like, oh no.
The table is nice and sturdy, but it seems as though my monitor is not.
Yeah, well, certainly my monitor little gimbal thing anyway. Yeah, apparently that's not sturdy at all. Welcome, Will and Rich. Good to see. What good guys?
What's up, Vinny?
What's good, man? I'm all gravy, baby. Marina, what's good? Hello, Will and Rich. Hi, Marina. How you doing? Good to see you.
Hello, Marina.
I think gold 4290 to 4350, somewhere around that area, reject and come down. What do you think? I'm gonna
4290.
4290. Let's have a look. That's what you said, wasn't it? 4290. Which would be about here. 4285. 4290 is there. And what was the other level? 4350, wasn't it? Let's have a look. 4350, yes it was. 43. Oh, that's a big area.
So 4290 until 350,
which is here. Yeah. I mean, I'd be very happy if we can come up to there. Let me have a look on the higher time frame. What would that look like? Why that area?
I'm also trying to figure out why.
Gold X or Gold S. Because that's above all-time highs. I mean,
350 is below all-time highs.
Is it?
Yeah, all-time highs was.
Oh, sorry. Yeah, fair. I've just checked on the 4-hourly. Yeah, my apologies. 381 is all-time highs, or around 390, something like that. Yeah, apologies. Okay, so if that's, I mean, between 332 and 279, you got an imbalance area. You know, you got this area here. Also, what's happened to my terminal? Why is that gone? Right, okay, my terminal's disappeared. File, let me just get it back up. View. Toolbox. There we go, I'm back. $45 down. It's disappointing. Yeah, well, I mean, I'm still $100 up, but...
Yeah, I mean, but overall. Yeah, it looks...
I mean, overall, I'm $100 up, but in gold. Yeah, in gold. This is the annoying thing about having swing trades and intraday trades all at the same time on the same terminal. It can be a bit of a pain in the bum.
Gold, to me, has re-established its bullish momentum, but it had slowish bullish momentum for a while, then it kind of dwindled off, and then we slowly started gaining a little bit sideways, but slowly but surely kind of like compressing, and then started moving, retested the compression, and is now carrying up higher. I do like the idea of us testing 290. However, I think that where we are right now, the price where we are right now, we are testing a small area of consolidation which was established on the 21st of October. And if you just look at that little area and you kind of like work back from there, you'll see that there's multiple areas where it kind of like struggled to break through, stayed within that area, attempted to push higher, stayed in the area, and then when it breaks nice and strongly. And 290 sits roughly at that point where you have a really nice break, retest, and continuation to go higher. However, you are right now at this area of consolidation. Yeah. Personally, if I were in that trade to go up into buys, I would want to come and test somewhere close to 324, 325. So 4325. That's where I would want my very first test point. That's assuming that where we are right now, we don't start consolidating and selling off. Because this is the first time that we've been in this area since October the 21st. We had one reaction, or close enough to this area basically, which was tested on the 13th of November, where we just touched that box and then we started selling off from there, and we are now pushing into that box And the box is 42.45 to 42.72. So yes, it is a large, about $28 per fine ounce area. But I do like the ideas of buys. It does look good for buys.
15 looks okay as well, to be fair.
15 looks good. We've been struggling to break above the Tokyo highs. We did close, but we kind of just sitting here. This is still on the 15 minute. We did break above, had some sort of attempt to push lower, and now we're back at it. And it's a bit slowed. It's still going up, but it's slowed. It looks a lot more like what happened during Friday's price action right now. This is the area that I'm referring to where we had a reaction. So you have your sell-off, consolidation, and then another sell-off. So this is the area where we're sitting right now in this price action. And this was the all-time highs with the all-time high retest. So I would want to see this area over here get tested afterwards. I like this area. Need to break through it. And then this will become the area of test. So 4.324 to about, what is that? 4.343. So give or take $19 or $20. This little gap here. Okay, well, that was a horrible drawing. Jeez.
It's okay. Leave that to your wife, mate. You just stick to the tools. Leave your wife do the drawings.
Freehand, by the way, freehand. I can't even do it I can't even draw a straight line with a mouse.
Yeah, fair. Even when you press Control. Oh no, Shift. On Trading View. Oh man.
So yeah, I do like this area up over here. I do like it. But first of all, we need to break above here. Top of this box, which is 42.72. So $18 or so from now. We might get that during New York.
I mean, we haven't got much high impact news. No, we haven't got any high impact news, I don't think, today. We've got 3 p.m, we've got medium impact, but we've got nothing higher than that, I don't believe. I don't think so, anyway. Taz, I thought that said Taz Porky. Taz Sporky. I really need a Linda Reed. Taz asking, William, is this a funded account? Yes, my man, this is my live funded account. Gone from 7% drawdown to 1.7% drawdown, so managed to claw a lot of it back. So just battling it out now still.
We do have red folder news at 5 p.m. my time, so 3 p.m. UK time, and that is ISM manufacturing PMI for today.
I just knocked my camera. I was gonna say, why are you looking at my? You're like looking directly at my chest, and I was like, why are you looking at my chest? My bad. My apologies.
Yeah, this week's news is tomorrow looks like a good day for trading because it's pretty much just yellow folder and orange folder news events.
Yeah.
Wednesday we've got the Aussie GDP, we've got the CHF CPI, we've got non-farm roll employment change for the US. So that is a market mover, and then we've got President Lagarde speaking as well just afterwards. Thursday we've got unemployment claims, and then on Friday is the biggest red folder news event where we have the core PCE as well as the consumer sentiment and expectations. And then unemployment change for the Canadian dollar as well as the unemployment rate. But other than that, we don't really have
We should have NFP Friday. It's the first
Friday.
No.
We have NFP on Wednesday.
Why do we have it on Wednesday then? Oh yeah. Why do we have that on Wednesday?
No idea. The previous one was also on a Wednesday.
Was it?
Yeah.
Where have I been?
The last one was the 5th of November. which was a Wednesday.
Yeah. Fair.
Fair.
Yeah. Can't argue with that.
Sorry, that's the wrong one.
Interesting.
Yeah. No idea why they've changed it. No idea. I don't know if it's just temporary or if we're going to see it permanently during this time frame now.
Strange. I'm not sure. Oh well. Yeah, unbiased trader. Will, I have the same clock. Mine is fake, and I'm guessing so is yours. You see my clock? Yes, it is not real. I don't think Rolex actually do a clock. If they do, I would have bought a real one, but that is not a real Rolex. That is, disclaimer, guys. This is a fake Rolex. It's a Folex. No, I got it from a place called Bista. No, it wasn't Bista. It was. Oh, where was it? It was in the Cotswolds. It was. It was called. It was called the Man Cave. In Broadway. There you go. So Google Broadway in. Oh, there we go. That's better. Gold is heading up. Google Broadway in the Cotswolds, and that's where I got this from. It was in a shop called the Man Cave, and I saw this clock, and I haven't got a clock in my room in my office, and I know that of course I got my computer and I got all my watches up there and all that garbage, and I thought, yeah, that's nice and all, but I was like, I want a clock. I'm old school. I want a clock, and I saw this Rolex clock, and I thought, that's just cringe, but I want it. I was like, I just know that people are gonna look at me like, well, come on, why are you buying a Rolex clock? Like, sort your act out. But I thought, I love it. It just screamed that, like, I want to come home with you. So I bought it, and then I actually looked at an identical Rolex watch to go with that clock. So it's got the black face and the green bezel. And I thought, I want an identical watch to go with that clock. I didn't like it. I didn't like the watch, and I thought, I'm not paying like 12 grand, 15 grand for a watch that I don't like. So bit disappointed about that. So I wish it was a blue one. Maybe I should have bought a blue one instead, but they didn't have one, so the green one it was. But yeah, that's cool that you have the same one as me. Yeah, that's why you look a little bit different, Rich. Yes, he is a handsome devil today. He is.
Why, thank you.
Trim.
Thank you very much.
Yeah, no more neck problems now, mate. You're a stone lighter. Oh, come on, Gold. What are you doing, man? Does Gold want to test a little bit lower? Surely it doesn't want to go down from here. Or does it? Interesting. I have to be very careful how I trade going forward now, because what I don't want to be doing is losing too much. So I got to remember I am still in open trades on swing trades. I gotta be careful. I gotta keep an eye out on that. Gotta really watch how Gold is doing. Great duo, William and Rich. Yes, my man. Thank you very much. If you like what we do, if you like the duo, if you like the dynamic duo of Will and Rich, then make sure you smash out the thumbs up. Make sure you stick a thumbs up on the video and subscribe to the channel if you are new here.
Yeah, we would really love it if you guys can help us get to 100k subscribers, which I think is very, very doable. It's very, very, very achievable.
Absolutely, 100%. And like, even drop in chat as well and be like, Will and Rich are the best. No one else. Everyone else sucks. Will and Rich are the best. I'm joking. Don't do that. You think it. Don't say it.
Well, what do you mean? Don't engage with us? Come on, tell us we're the best. If not,
engage with others. Wait for the other guys to come on and then tell us that we're the best. Okay, if this closes like this, I'm gonna have to get out, because this is too
gold.
Yeah, this is too bearish.
I mean, 5 minutes. We are struggling. So if I just move this out of the way, we have a high swing point, which is right up over there.
Yeah.
If we don't close, like if we can wick it or look good, like if we can show weakness to the downside, yeah, fine. If we close super bearish, which we're trying to for some reason, if we close super bearish, then I'm just not going to be in it. I'll probably close everything out just to try and mitigate losses.
So we have a swing low at 42.48. If this gets broken, now obviously caveat, this is on TradingView, so it's not necessarily on MetaTrader. Obviously on MetaTrader, the price might be different. But the thing is, we have not made a higher high, but earlier in the day we also had a high swing where we had a higher low. So that was the high swing. Let me just switch that off. That was the high swing. This was the low swing, and then we made a lower high but a higher low, and then this was a nice volumetric movement up higher, but that has now created the high of the day. This is technically a lower swing. Now we need to see what happens in this area over here, where price is currently. If price starts pushing lower and breaks lower than this swing line, so like I explained, that the swing point over here, and starts making a lower low, then we need to see whether or not price can come back up again to try and make a lower high, lower than this box over here, or at least the swing point, and then potentially for it to push lower. However, the way that things have been going right now, this is not much. It's not that bad, mate. It's really not that bad going lower. I think we may still potentially come and test. I know I've drawn a lot of stuff here, but I think we may still come above this point yet again, come and retest it. Still bullish.
Yeah, it is still bullish. That's the only thing that's making me think, maybe. The thing is, like...
Will, can you just quickly take me off of screen for 2 minutes?
Absolutely, my man. Not a problem. Yeah, it's put some maybe in it, guys. I'll be honest. We'll see. I'm $100 up at the moment. William, even I have the same view on GBP USD. Target previously weak highs. Lovely stuff, man. Yeah, cable hasn't been the best for me at the moment, but it's been doing okay. It's not doing too badly. Just gonna bring up my screen real quick. So this is what I'm looking at on gold. Let me know, guys, what your thoughts are. What do you reckon? Should I hold it? Let's do some probability counting. What do you reckon? Shall I hold, or shall I just think, nah, screw it, take out as close to break even as possible? Guys, don't forget as well, absolutely smash that like button. 124 likes. Let's get to 220. Let's get to 200 likes by 1 p.m. UK time. So, oh, hello. We've got just under an hour. We got about 53-ish minutes. Absolutely smash that like button, guys. Let's see how many likes we can get.
Sorry, the weather here by us just turned suddenly out of nowhere, and it's pouring down rain. So, it was raining into my office. I needed to close windows.
Oh no, you had like doors and windows open, do you?
Yeah, I closed them all now, but it was.
I was gonna say, make sure you close them.
I might just slip and slide my way through the office. So just glad that I'm gonna have to mop.
Oh my god, is that bad? Wow.
Yeah, it's like a cloud break, mate.
Oh, mate, you fair. Yeah,
easy.
Yeah, fair.
Anyway.
Oh man.
And I have lightning
dude,
as well.
I heard that.
You heard that. So, dude, if my power goes out, I really do apologize if the power kind of like gets knocked out. But
I was like, yeah, bro, I heard that, man. Yeah, if you disappear, that's fair. Don't stress. Vinny, are you in any trades, Will and Rich? Yes, I am. I'm currently in 1 from this morning, 2, 3 from yet last week, 4, 5 from just now. So let's go in order. This morning, US 30 long trade on the 4-hour. We're above the EMA. I would have liked to have opened up at this line here, but I missed it. So we pulled back into this consolidation zone. So I've entered in here. NAS, again, above the EMA. We're struggling at the moment. I may end up closing this probably today. we'll see, depending on what momentum we can get. Same answer with the S&P. Let's see what we can do with the S&P 500. And gold from today is... It's not looking great. It's not looking bad. It's not looking great. We'll have to see what goes on. Sachin Patel saying, William, sir, your tattoos are awesome. Thank you. Thank you. What do you think? Wow. Yeah, I'm filled with tattoos, man. I do like my tats. But I try not to show them too much, to be fair. But I do like my tattoos. I got, in fact, this one here goes like all the way. Well, you can see it. It goes all the way up there, and it goes like down my chest. If you follow me on Instagram, you probably see them a lot more often, because especially when I go to the gym, I'm always in some form of either vest or topless. TX for answer: how do you succeed 80% drawdown?
By sticking to your plan, mate.
Yeah,
Realizing that you went through is, in a nutshell, it's just one small area. If you know that you were sticking to your plan, and your plan has proven data to support its profitability, understand that the market is cyclical. You're going to have times when your strategy works great, times when your strategy's just not working all that well with the market. And it's realizing that and holding to that back-tested / expected data that you have.
Yeah, absolutely. That. Just stick to the plan, and then
It's weather, mate. Woo!
man, I can hear it. So what I've done now is I've actually lowered my stop losses down to under this swing point, because if we get a break and close below here, then I'm watching it. So this is my discretionary stop loss. I'm watching the markets. I can decide to take out manually then. Wow, gold is melting. Okay, there we go. I've got my answer. I just need to wait for a close. Oh, dude, that sucks, man. That's going to be...
To me, if it closes below this swing point, exactly as you've marked it up, if it closes below, then it's signifying that there's a stronger potential for us wanting to start either correcting this bullish movement, or we're going to move into consolidation now and kind of like decide to just stick around in this area.
Yeah, same as that, man. Dude, that sucks. So I've already taken minus $200 for the day. Hate it when I have a losing day. It's just so mentally draining. But it is what it is. It's part of the plan, you know. Sucks.
Yeah.
But
2 minutes until this candle closes. This 5-minute candle. And it is a strong-ish bearish
depending
candle.
how close we close to this this line here, if we close relatively close, I may just close the trade. You know, for me to keep this trade open now, we have to show like a significance of wick, like now or above sort of thing. Otherwise, you know, the confidence just it's not there on gold.
Yeah. Even the 15-minute is a bit bearish as well. A bearish candle, I mean, not the direction. The
15-minute looks pretty crap as well, to be fair. Like.
Heavily slowed, basically. So for the last 2 hours, we've been hopping between this area, basically.
Yeah.
Bit of indecision. NAS is looking like it's turning bearish.
Yeah.
We're starting to make lower lows and lower highs in relation to the previous highs and lows. So that's just good old-fashioned price action. So this was swing high. This was a...
Will is stressing like me. Yeah, man. Yeah, the thing is, I thought it was a valid trade.
Turning.
Yeah, maybe I needed, maybe I need to.
GU is timing.
If I lose
EU is
now,
probably
I'll
also flat.
step back for the day. I need to readdress how I'm looking at the markets, or certainly how I'm feeling in the markets. What I don't want to do is go and revenge trade, thinking, look at GU, man.
Don't pull a rich, mate, and lose your temper because something didn't go your way. Don't do that, mate.
Look how annoying that is. Like, do I close that now or do I hold it? I mean, we've wicked it, but we've not closed. We've not closed close to the line.
On the 15-minute, we're still in a base area.
Maybe I'll give it. Maybe I'll give it 5 minutes and wait for the 15 to close. Oh, that was the 15.
Oh, just see the light. I just see the lighting.
I love the sound of thunder.
Yeah. I think it's hailing here at the moment. Anyway,
That don't surprise me. Like, we better have a big push up now. If we don't have a big push up,
where did you enter initially?
It's okay, mate.
50, 53 and 58. Okay, so 53 and then, ooh, the 58 one is a bit high.
Yeah, it is, isn't it?
But the 53 one is decent. If we can push back into that 58 zone, you can close one at break even, or, kind of like just leave it a little bit more until we push a little bit higher than 42.62. So the high of the day. That would be a nice little bonus.
Yeah, it'd be something. It'd go towards this morning's loss, I suppose.
Pound has started to find a little bit of upward momentum, but we're still stuck within this range from yesterday. So we're stuck in between the lows and highs of, not yesterday, Friday. EU is also starting to get a little bit more momentum as well. To be fair, EU does look good for sells yet again. Not sells, buys. Looks good for buys still.
Yeah. I'm watching. Yeah, I'm even watching my blues go down, which tells me that the NASDAQ is dropping.
NASDAQ is dropping, mate. Nas is falling. So it's 25,200 at the moment.
Yeah.
So when we spoke this morning, I thought there's a possibility for us to push a little bit lower on NASDAQ when we were talking about it. But then we just kind of like went up a little bit and kind of consolidated. So didn't quite know whether or not we were going to still have that bearish momentum. Nibetitai Haloi is asking, what indicators are you using, sir? So I know Will doesn't really use indicators. The one that's on my screen is just a simple, not a simple, but it is a EMA. So this background over here is just a sessions indicator. It's a market sessions indicator. This orange line is just a EMA. In this case, it's a 30 EMA. And then I have a zero lag EMA, which is not a zero lag, it's just the name of it. But it's just an EMA with an EMA of that EMA. So in this case, it's a 20 EMA with an EMA of that EMA. So it works quite similarly to the Kalman chart, the one that LJ likes using, that indicator. It's the same idea. The only thing that this basically does is just shows you a little bit of momentum. That's all.
An EMA of an EMA of an EMA.
Yeah, it's an EMA of an EMA. So basically how it works is you have crosses, and that is where price is lower than what it was on average. And then if it stays in or below this point, so below the EMA, the band itself will stay in that color until you have a cross again where price is now showing either a slowed momentum to the bottom end and then start picking up momentum to the upper end. So
just
use it. Yeah.
Sorry. Yeah, no, sorry, mate. Go on.
No. I just use it as a very, very quick confluence to see. The same way you would use a 10 EMA or 20 EMA, if it's below it, then you want to see, or you want to see it carry on being below the 10 to confirm that you're still in a bearish trend. Visually, I just have a look at it very quickly to see, okay, we're slowing, because if you're slowing, then you start having these convergences where they start coming closer to each other. So you'll see that the blue line and the black line is very close to each other. They don't cross. Price attempts to push higher, it fails, and then it starts converging and starts pushing lower. So I just use that as a very, very quick reference, especially if I'm jumping between screens. So if I'm jumping between GU, I don't want to go and, okay, so we have a line here, there's that line. It's just a very, very quick visual reference for momentum and price action, which is very, very, very quick. And it's free to use. It's free to use indicators.
Yeah, nice. Awesome stuff. Just to let you guys know, I've jumped out of gold. I just
break even.
Yeah, well, no.
One break even.
Yeah, one break even. Yeah.
Other one loss.
Yeah. Only slightly, but this was just too deep. No, it's just
the fact we have a swing low, which got tapped.
Yeah.
So not close below, but price actually went lower than, and it's now, what is price going to do now with the follow-up? If price starts pushing lower, then we know that we are most likely going into a bit of a bearish trend, and that the bullish trend, for the time being at least, it has run its course.
Yes. Yeah, exactly. So for me now, we've got this area here. So let's identify our current highs, lows, previous highs, lows. We've got previous high, current high. We've got previous low, wicked so current low. And we've wicked the previous low, pulled back up. I want for this to be a valid buy now. I want to see a break and close above the current high or the previous high. So for me, I'm not interested. For me now, this, if I was, let's say I walk out and then I walk back in with a fresh mindset, I've not taken a trade today, I would not trade this. I would wait for a break and close either above or below these two trend line.
Unbiased trader saying, what revenge? Get your dummy account out. I like that.
Yeah, absolutely. Yeah. No revenge trading here. It's not allowed. So, you're not going to see me Revenge of the Sith yet.
By the way, guys, it is still Cyber Monday today. So for the whole of today, we still have discounts on the The5ers accounts if you buy a new evaluation account. So I think today is the last day of the discount. So for those of you who haven't already and you feel that it is time for you to get into your prop trading journey with the The5ers, go and hit up that hub and get yourself an account at a discount.
Absolutely. Yes,
yeah.
Man. That's exactly what you should do. Come and join us on the journey of going full margin funded. I mean, technical analysis funded. I'm joking. Full margin all the way. Just like massive profits.
No, don't do that. Don't go full margin. Oh, by the way, M76BB, I just got margin called closed on the rejection. Dude, that sucks. Getting margin call on a trade, that always hurts, mate.
I hate that. I haven't had a margin call in years, but I remember getting margin called all the time. It sucks, and it never gets better.
Yeah,
it never ever gets better than when you'd never get used to getting margin called. It'll always suck.
Yeah, margin calls suck. Okay, mate. This close on gold was pretty good, mate.
Yeah, it was, wasn't it? Yeah, I looked at that and I thought,
Because this is a volumetric bearish candle, and there's 20 seconds left of this candle, so the chances of this one closing as bearish is quite strong, unless something miraculous happens where price just goes. So this is most likely going to... Oh, I wanted to ask you this. This was a question that I had the other day. It was just mulling around in my mind.
go on.
Whenever you sit and look at a candle, it doesn't matter which time frame it is, but let's say hypothetically it's the 5-minute or the 15-minute. Do you pay attention how much time is left before that candle closes, before you kind of like say, this is going to be a bearish candle, this is going to be a bullish candle? You get... The reason why I'm asking this is because I've noticed sometimes if you have proper momentum and price looks like it wants to start pulling back, if it starts pulling back in the open of the candle, so if it's the 5 minutes, your previous 5-minute candle is just closed and you're within the first 30 seconds, let's say, of that 5-minute candle, price kind of like jolts around, but the last minute to 30 seconds of a candle gives you a very, very good idea of where that candle is going. So if the candle is more towards the end of its cycle of that 5 minutes, if it's like on the upper portions within that last 30 seconds, 1 minute to 30 seconds, it's generally going to be closing in that area. Bar something terrible that happens. Like in this case now we're having a rejection candle.
Yes and no. Like, I do look at how long's left on a candle. But for example, when we were looking to the upside here, and I was like, oh, okay, we got like 30 seconds left on this candle. This is what I want to see. And then it started looking good. And then next minute, with like the last 0.5 of a second, we just dropped. We whipped down and dropped. Like I don't look at it as in, okay, there's 30 seconds left of this 5-minute candle. Because it's not. Because price is like water. Water doesn't just stop halfway down a hill, then continue going. Or it doesn't stop halfway down a hill, move back up the hill, then drop down the hill. Water doesn't do that. Water flows. It may meander. So like a river, you call it a meandering river. And what a meander is that sort of snaking effect. It's a curve. So price may meander. It may, slow up, but it will never stop. So therefore, I don't look at price like on the 5-minute candle as, okay, price is reacting during this time. Like it's not going to stop during this time. Instead, it's a higher time frame. It's over the monthly, the yearly, the decade, the quarter, the hourly, the weekly. It's always flowing. What I want to do is pick two parts of pick a section of the river and see how fast it's flowing. So it's like, okay, between this point, it's flowing fast. Now, if I look at a meander of a sort of like a river, if I look at the corner and see how fast it's coming out of the corner, potentially it's going to be slower coming out than it is going in. So like towards the end of the candle, I will look at it and think, right, okay, let's have a look, see what's going on towards the end of the 5-minute, but it doesn't necessarily sway me. Like I will, I'll then look at the 15. Like right at the end of a 5-minute candle, I'll jump up onto the 15-minute to see what it's like on the 15.
Okay. No, I was just very curious to see what was your sentiment with regards to that. Yeah. The reason why I mentioned it is more towards the line of seeing, like now, we have had a strong bullish candle followed by a very strong bearish candle followed by yet again another strong bullish candle. So if you look at how prices moved over the last, let's say 3 to 4 hours, you'll generally see that there's follow-up. There's usually 1 or 2 bullish candles followed by a small bearish candle, then follow-up bullish candles and so on and so forth. But the moment you start seeing where price is pushing the same volume as it did earlier, and then all of a sudden it just absolutely collapses, that is telling. that's telling you a story. It's telling you that there's massive indecision in that area. Because if there weren't indecision, if one of the two participants in the market was in control, you would not see price collapse suddenly within a small time frame. So consider this is a, how large was this candle? So this was a $5.70 candle. This one that we had here. So $5.70, that's now dollars per ounce. $5.50 as an example. If this had follow through, if we had price slowly push, or like just coming down ever so slightly and then start pushing up, then you know who's in control. Just based on this one candle. But because you're having this follow-up candle right down over here, it's absolutely pushing lower, and then the very next 5 minutes it's pushing up again. You're getting this the whole time. Who's in control? You don't know. Time frame is, it's a very short time frame. Prices, if you want follow through, it will show you this direction. So right now, even though you're thinking that we're in a bearish trend or that we're busy pushing bearish, right now we're in an indecision point. Price itself is undecided. Right now, we have this low swing down here. We've wicked it, but we haven't broken through. We have this high point up over here. We've just touched it, and then we're just stuck in between these two areas, and it doesn't matter how they move. We're just kind of like sideways right now. So the candles, how they close and how quickly they close, plays a role. And that's why I wanted to know your opinion on if you pay attention to when the candle closes, what was its action prior to it closing, how is the follow-up candle's conviction in the earlier points of that price action. Because the thing is, it's still one 5-minute candle is 5 1-minute candles. Yeah. So you can see the exact same thing on the lower time frame as well as on the higher time frame. An 1 hour candle is 4 15-minute candles, and you can see generally how your hourly candle is going to close based on your 15-minute candle. Yeah. As like in general. So I was just curious, mate. But it's your answer is sufficient. It's sufficient to answer what I asked. It's
good.
Good.
I'm just watching the NAS on the 1 hour. I can't see us being, we've come down into this zone here on the 1 hour, but we've wicked into it. I can't see us wanting to, maybe. I don't know. I've gone from 430 to $50. Sucks. Dude, gold is doing nothing. Crap that looks. Like I said, I just need to wait and see now. I want to see a break and close in a direction to trade gold.
NAS, I think, has the potential to carry on pushing bearish. Granted we break through the low of Tokyo. And you remember when we spoke this morning, I said the fact that we've already taken the low of last week Friday, and we took the high of last week Friday and then went to go and take the low as well. Doesn't bode strength for me in terms of the upward. It doesn't feel like there's this potential to push all that strongly up. We've had 1, 2, 3, 4 days of bullish momentum, 1 bearish day, 1 bullish day, and then now a strong bearish day. And I don't know how I feel about it. It doesn't feel all that like strong and momentous. I mean, here on the 4 hourly, we have a decision point, which was right over here before we started pushing lower yet again. And that is exactly where we kind of like wicked from, or tried to push price lower. on the hourly. What does it look like on the hourly? So you can condense it to a singular candle, which is this candle over here. How did price act around it? Literally just wicked into it. And then volumetrically started pushing lower. And this candle over here, this bullish candle, sorry, this was the last attempt, these three candles was the last attempt on the hourly for price to potentially push higher. And then it got followed up by absolute just drop down. It just failed here. And then you can then see price now just wicked into it and then volumetrically had a reaction. Now, but in general, you would want to see price come and retest it and then fail yet again, either making a lower wick or either slightly higher and then tanking off. But we didn't get that at all. The only thing that we got was reaction, attempt to push up higher and then further fall off. What is the fib? On the fib, we didn't even reach the half point. We didn't even reach the 50% fill of the fib, and it's starting to push even lower. So I'm of the opinion that NAS is most probably going to disrespect this box, which the price is 25,170, 25,09. So most probably going to disrespect this if we take the low of Tokyo, which was the swing point. So
Yeah.
swing point before we started having some bullish attempt. So when we had the follow through on the bullish price, basically, so price pushed down bearishly, bulls started to take over, bears attempted, they failed, bulls attempted yet again to push it up higher. They couldn't even take the high swing point that the bulls initially created, which is up there. Couldn't take it and then started pushing lower. I honestly think that we're potentially going to go lower on NAS.
Yeah, it'd be interesting to see what happens at those lows.
Yeah, and that's just on the hourly. On the 15-minute, you get more of an idea. Because on the 15-minute, you can see it pushed lower. Attempt to push lower yet again, failed, started pushing up. Attempted to push lower, which was effectively a higher low in relation to the previous one. But when we had another attempt to make a higher high with this candle over here, it failed. And then we started pushing lower. So this is an M. And M structures are generally just attempt, fail, attempt, higher, high, higher, low, lower, high, lower, low, attempt to push up, and then continuation lower. So my expectation is this. With the very least, Tokyo low / the daily low to be tested. The current daily low to be tested.
Yeah.
And then we have a lot of low areas down here where price attempted to push lower and didn't or couldn't. So 25.77 and 25.55 is an area potentially for price to come and test. That is if it breaks through this one, which was the last candle before we had multiple bullish candles. This was the last attempt to push lower. But you can effectively think of this as a low swing point that got retested and then pushed up off of. So this is a retest area, so it's an area of interest just slightly below that point. I don't know. We'll see what New York brings, but I think that we can potentially come and test this area right here. Bar we break the Tokyo low, and bar we break lower than, or potentially don't react strongly off of this box. I mean, all what I'm saying is completely going to be moot if we come into this box and just absolutely start, running off,
Yeah. Well, look at gold right now. Gold was very similar. We wicked the low, that swing low, and then now we're starting to push back up. We're actually prices above where I closed out. So, yeah.
But I mean, fair. Like you didn't make a new high.
No.
I here.
Still,
so
yeah, I'm still glad that I closed out. If I just bring my chart up now, you can have a quick look at what
Yeah.
I look at. and I'm still glad that I'm closed out.
The thing is, price was showing that it wanted to potentially go lower. It was wicking.
Yeah.
It was struggling to push higher. It started getting larger candles, but as we were discussing
now,
each candle individually, there's some back and forth there. It's a little bit of indecision. And if there's indecision, do you want to be in the market?
no. How can you know where you want to go with price if price doesn't know where it wants to go? So
No, I mean, fair. You were already in your trade, so you already had an idea based on where price was at that time when you made the decision.
exactly.
But now price is telling you, I'm struggling a bit. I don't know where I want to go.
So I thought, okay, cool. I'm not going to get on a train if I don't know where it's going. I'm going to think, oh, I may be on the wrong train here. Let me get off at the next exit.
Yeah.
And that's exactly what I've done here. There's a train. I thought it was going to a
specific station, and nope.
Yeah, let's call it. I don't know. It was a nice Maldives. There's a train here. somehow there's a train that goes to the Maldives from Pembrokeshire, and turns out it's not. It's going to Ireland, and I thought, well, I don't want to go to Ireland. I want to go to the Maldives. So, the next station, which was here, which is technically a breakout of this consolidation zone. So, we've got this small consolidation zone here. We broke out to the downside quite bearishly as well, like quite decisively. We whipped up, showed rejection to the upside, headed down, very little rejection to the downside, came down, wicked this low, considered the idea and the possibilities that it could close it instead of wicking, pulled back up into the consolidation zone. What is this? It's a break and close below, and a pullback of an internal consolidation zone. Now, that isn't my mechanical strategy. That's my discretionary strategy kicking in. It's an internal zone. However, is it a valid? Yeah, I think so. I'm glad that I got out of that. Why? Because we came straight back down, then we came back up, and now we're consolidating. Now we don't know where we want to go. So this is literally going round in circles. It's a model train. It's just going around, choo-choo, going around in circles. It's got no real destination right now.
GU and EU, finally GU has decided it wants to go in a direction. EU has been in this direction this whole time, but it started, less deep pullbacks. It's continuing nicely towards the upside. GU has decided that it wants to go bullishly, which aligns with the fact that the NAS is going lower. So we're seeing a little bit of dollar weakness, and we're seeing EU and GU capitalize on that slight weakness.
Wow, the Dixie is dropping as well. You go into the XY on the 4 hour, it is dropping.
And remember this morning when we were discussing the indices on our stream, I mentioned that to me the Dixie was pushing lower, NAS was going to push lower. It's just when you see price really struggle, and you can see it with the candles, like it's really struggling to push higher, and then it starts gaining like a little bit of momentum, it tends to kind of like move in that direction fully. Like it really, really just pushes and tries to carry on. Anyway, maybe we should have a look at chat, because I think there's some really interesting questions that has popped up.
Absolutely, yeah. Sorry, guys. We will have a catch up with chat. Pepperoni saying, from 1% to passing, now I'm 4% in drawdown in phase 2. Ah, shit, man, unlucky. Dude, that's really unfortunate. Yeah, that is really unfortunate, man. But look, these things happen. Don't stress over it. It is what it is. Sometimes you just got to deal with, losing phase. I was the same. I went from 3% up on a funded account to 7% down on a funded account. I lost over 10%. So, look, these things happen, man. Don't beat yourself up over it. How long should we hold a trade until it hits TP? That is the best answer. No, how long do you want to hold a trade for? Well, whatever's in your plan. Yeah, whatever is in your plan. Bobby Fisher, I'm still holding. That was your GU buys, I believe. Absolutely awesome, mate. Congratulations. Already bought a 5k account 2-step. Yes, people, absolutely love that. like I said, if you want to join the best prop pum, if you want to join the best prop flume, make sure you get into the 5ers.
I was about to say, are you gonna come up here with your little bit of Irish and a little bit of like Northern English?
I was gonna. It was like sort of like Bristolian Irish.
Bristol.
Sort of
I'm from
like
Bristol.
You're a Bristolian. I am. I'm gonna go in my tractor now. I'm gonna go down with the corn bean harvester, and I'm gonna go rip up those plants. I'm gonna go
The corn bean harvester.
and wait for all this to blow over. Mates, do y'all look at FX pairs? If so, New Zealand US dollar buy setup. I don't have the Kiwi dollar here. I can get it.
NZD USD from Friday, so the whole of today effectively has been a little bit consolidative. So the whole of today, basically, we're jumping between 2 points. So we've just wicked the high of Friday, and we have struggled with multiple hits on this lower point. But because this, for the same reason as on EU, same reason, we've already taken the high of Friday, even though we've just wicked it. But when we had the opportunity to push lower, we failed. And price is now kind of like stuck in this point. So if price were to start pushing higher and break this, if it comes close to this, I would say buys. I'm looking more towards NZD buys just based on this idea. We've taken the highs of Friday. When we had the opportunity to push lower, multiple attempts to push lower, we failed. And now we're coming to test this high point again. If we break through, so the idea of breaking through, retest, and then continuing up. Where would we test for? That is a good question. Not that anybody asked that. Where can we test? So right now we're at this area of interest here. Let me just confirm. Yeah. We're at this area over here, where we had a little bit of sideways action before we eventually started pushing lower. Very first area to be tested is right there, which is 57,668 and 57,770. And then we also have a very nice area up over here at 57.92 and 58.01. That's if we can break and close above this. There's an area to be tested, and there's another area to be tested just above that. That's if we break and close above this current box, which is pretty much being tested right now. This is on the hourly. So if I go down to the 5 minute, yeah, if it breaks and closes above this area, comes down to test it, respects the retest, and then starts showing some sort of bullish follow-up candles, then I would be more than willing to get in on a trade, aiming for somewhere up over there and having my stop loss just underneath this. This is just an example. I'm not saying take this trade. It's not what I'm saying. I'm saying it's an example.
These are signals. Financial advice.
It's not financial advice.
Oh my god. Do not take this as serious.
But if I were to take this trade, this is something that I would take, but it would be based on the break and retest, because I'm viewing this area as a larger range. So it is currently just hopping between 2 points, not really showing any sort of volume. It's not showing any sort of like real breakthrough. Right now we're getting a bit of a volumetric candle in relation to all of the previous candles. So I want to see a break, retest, and then continue up higher. But just as easy as this is happening, we could hypothetically fail and then start pushing lower again. You know?
Yeah.
Just as easy, because we haven't broken this consolidation. We haven't broken this sideways action, price action. We're making higher highs, higher lows, lower highs, higher highs, higher lows, lower lows. We're just this is sideways price action. We need a break, close, continuation.
Dude, look at GU right now. Mate, GU. Bumping.
Yeah, I'm telling you, like, I said it this morning. GU has not been treating me very well recently. But it is what it is. It's one of those things. EU as well. Wanted to be in on EU. I did mark out just an explanation down here. For those who were interested, we have a low swing. Like I said, the exact same idea on EU as there was on NZD, USD. We've taken the high of the previous, in this case, Friday. When we had the attempt to push lower, there was a low that was made, which was the swing point. When we had the attempt to retake this low, we failed. And then we started pushing up. And as we're pushing up, we are creating bases. We're creating areas where price can potentially come and retest and then react off of. So the same as the low point, where you have price comes towards the low point, pushes away from it, comes back to it, and reacts off of it, you get the same idea with your bases. Price moves up, creates a base area, so it's an area where there is a back and forth, an arm wrestle between buyers and sellers. Buyers takes over. Sellers try yet again to try and break this trend, because that's what they're trying to do. They're trying to break the bullish trend. They fail, and then price moves up. So you have a effective break and retest of this base area. If I go to the 15, you'll see the base area. There's the base. Reaction off of an established area. You're starting a rally. You create a singular candle in the opposite direction of the rally, and then you have follow-through, strong follow-through, which is this candle. Price attempts to come back to it, fails, and then starts pushing up. This is textbook. It's Richard's textbook, but this is a textbook rally, base rally, retest continuation.
Yeah, nice.
The textbook that I wrote.
This is my textbook.
Didn't write the textbook at all, mate. It's just how I view it. But
this is trading Bible. You should all study it.
And this is why GU has been such a numpty for me, because it does the same things. Established area at the top. We have a high, price tries to push into it, starts pushing lower. Creates a low, reattempts to push higher, fails, starts pushing lower yet again. What is it followed by? You think that there's going to be follow-through? No follow-through. It reverses. And then you think, okay, cool. What now? It's going to create a singular or two candles, and then it's going to start pushing up. No, it starts pushing lower. It makes a lower high in relation to the previous one, even though it closes higher than the previous candles. Okay, it's going to probably go bearish from here. It's indecisive. It's indecisive. And then it just starts moving. So where do you get in? Do you wait for price to come back to this area over here of indecision? I mean, fair. You could have had this whole section here. But this is on the 15, so you would have had to go down to the 5, and then even then you would have been unsure, because you would have been, okay, price needs to break this. Just wicked it, and then it came up with this nice little candle over here. Oh, and then it starts turning. So maybe then you could have decided to get in on, let's say, a break trade like this, as an example. But then you're so close to this up end over here, this area where you had multiple reactions previously, that you would feel a little unsure whether or not you should take this, because you're too high up in this area. You would have wanted to be down lower, but when you had the opportunity to get in lower, price was not showing you that it wants to go up from here, because you had a high, a lower, a high, a low, a lower high, a lower low. So price action here was showing you, I want to go down. So it's not always that straightforward. Gold will go up. Well, right now it's sideways, mate.
Yeah, right now it's doing nothing. CC, we tried the scones this weekend. William loved the jam. Wrong stream, CC.
Yeah, wrong stream.
That was the other one. We do love scones. By the way, guys, scones or scones? And is it jam first or cream first? Discuss. Argue. Fight.
I'm just going to sit here and watch the chaos unfold.
I'm just gonna watch like all the cogs moving in harmony, and then I'm just gonna drop a spanner in and just see the chaos it creates. I'm just gonna sit there with my popcorn. I love doing that. There's just something so funny about sitting back knowing that you're just gonna sit there and watch chaos unfold, and you're like, dude. A lot of the time, chaos unfolds and like really minor things as well, like nothing serious, nothing important. I remember once I was just sitting there and I said something, and it just created a massive argument. I'm like, wow, where did that come from? Turns out everybody had had an awful day and was just bubbling, sitting on something. And I was just sitting there like that. Okay. Yeah, I have clearly thrown a spanner in something here. So yeah, a good way to do that with traders, if you really want to piss off a load of traders, just go up and go, so what's everyone think of ICT? And just watch it unfold. Watch everybody turn into like two opposite sides of the rooms, and they will argue on it.
Two best friends on either side of this table would throw knives at each other.
It's like
trying
watching
to say
political
what they want to say.
parties. Like, it's like watching like the right wing and like the left wing. It's like just watching. Like, they'll be like, "Oh, we love each other. We're best friends. Oh my god, we're BFFs forever." What's your thoughts on ICT? I hate you. It's like, oh, okay, fair.
Point, mate.
You know, it's like you never bring up politics at a family event. You know, you don't bring up politics, religion, or ICT.
Well, thank goodness only one person in my whole family knows who ICT is.
Yeah.
And that's my brother.
I was going to say, what's your brother think?
His belief system is the same as mine, so...
Oh, that's something then. You know, it could be worse. You could be like complete disagree.
It's like, what's that saying? This person lives rent-free in your psyche.
Yeah.
Like, the moment somebody mentions a person, and you're like, oh, that person. So it's like, yeah, he lives rent-free there, my friend.
Just living rent-free in your mind for whenever.
GU, mate. It's moving. It's doing its thing.
It is moving.
Gold is showing the potential for a downward push as of right now.
Well, right now we're under the breakout. We're just waiting for a close, I think.
Yeah. Okay, maybe even if we don't necessarily start pushing bearish from here, but rather the idea that we're going to have a bit of a pullback first, I think. So, yeah, I do think that there's a potential for a pullback here because we are showing the idea. If I just get rid of all of the drawings, just straight up, you can see that there is a real struggle to push above this point right here. Massive wick above the Tokyo high, an attempt to push higher, failure, pushing a little bit lower, a reattempt to push higher, failure, and now we're starting to show the potential of a turn. It's not as simple as we're making continuous higher highs and higher lows on, just on the structure. We're getting the higher highs, and then now when we had the attempt to, now we're doing something like that. It's not as straightforward.
Yeah, absolutely, mate.
And then anyway, I would always caution, or I would always preface caution when it comes to trading against a trend. So I'm not saying go for sells now. That's not what I'm saying. I'm saying just be careful.
Drop down onto the 5 minute, you'll see it wick, and it's back up above the line.
Yeah. Once again,
it's just showing sideways price action. Doesn't know what it really doesn't know what to do on gold.
Unless you are a scalper and you want to scalp.
True. Maybe check out the 1 minute.
No, I actually don't even have the 1 minute up here. Let's put it up.
Don't blame you. I got it here now, and it's a bit crap, mate. To be fair, I hate the 1 minute. I don't know why. I just don't like the 1 minute time frame.
I mean, I feel like everything that you can see on the 1 minute, you can see on the 5 minute, but just with
but better.
less noise.
Yeah, literally that. I don't know. The 5 minute to me is the 1 minute.
Dude, I do almost all of my trading on the 5 minute. I prefer just the 5 minutes movements. Well, for entries, obviously you use different different time frames for confluence, but I use 4 hour, 1 hour, 15, and the 5. That's all I use. I look at the 4 hour once a day. I look at the daily once a day. I look at the hourly maybe twice a day. And in general, I just keep to the 15 and the 5. I see all of the price action that I want to see on those two, and I'm happy with it.
Yeah.
GU.
There
Still
we go.
going up.
There you go. We've finally got the close now.
EU is now in my area that I marked out this morning already, that I wanted to see tested. We had the break and close above this area and no real attempt to push lower, and then price just kind of really getting its momentum now. It's really there. Every time you have a pullback or attempt to pull back where the bears are trying to break this trend, it's weaker and weaker. The attempt to break it. So this attempt over here is weak. This attempt over here is weak. This is a much stronger attempt. This is a strong attempt. This is a strong attempt. Weak attempt, weak attempt, strong attempt, but still no follow through. But it made sense because we were in this area where we had already rejected once. And then when price came back to it, strong candle, failure, attempt to push higher. We break above the swing point. So yeah, we broke above. Attempt to push lower, a failure. Attempt yet again, stronger than the previous attempt, failure, and so on. But now we've actually gotten to the point where we're getting nice, proper volume.
Yeah, exactly. And just seeing some of the boys are saying about, bro, tell us about US 100. What should we expect out of the NASDAQ today? I'm going to say buys. I'm going to say we're looking at buying all day, every day for the next couple of days. But that's only because I'm in a buy. However, what are we really going to see? I'm not too sure. So on the 4 hour, we are selling off slightly. 1 hour also, we had this massive dip here over Asia session. I don't know why I've got that highlighted. Get rid of it. There we go. We've tapped into this 1 hour demand zone. Yes. So we've got this 1 hour demand zone, this consolidation to the low side. We've tapped into it once. We've come down again, tapped into it a second time, double wicked. 15 minute, I'm hoping to see some sort of microstructure, or what I'd like to call microstructure. Some movements to the upside and a break and close above this level to show us that we're trying to continue to the higher. On the smaller time frames, like the 15 and the 5, again, not really seeing much other than sells. Maybe a pullback up into this area and then a continuation lower. But the 15, and I wouldn't want to go much lower than the 15-minute time frame today for anything other than for the NASDAQ. I wouldn't want to go anything lower than the 15 or than the 15 for anything other than sells. But I don't know. Again, right now I'm biased because I'm currently in a buy, so it's difficult for me to be like, 100%. Let's see some sells when I want to see buys. Can I see it? If we break and close under this zone here on the 1 hour, maybe
we have the same area of interest there.
Yes, yeah, I remember you marked it out earlier. So that's what I'm looking at on NAS. Same goes on US 30. Yeah, literally the exact same. US 30 looks a little bit more valid for sells, I think, because we are starting to wick up a bit more on the 4 hour. So we're consolidating here. 1
There
hour.
is a bit of a correlation between them, though,
Yes, yeah, yeah.
but not necessarily all the time. So it's not to say just because the one is selling, the other one's going to follow.
No.
You know.
Exactly that. So 1 hour, just consolidating. 4 hours, wick into the upside ever so slightly. S&P 500 is basically the exact same as the NASDAQ. Would I want to see anything on the S&P? I don't know, Pooley, if you're watching right now or recovering from your weekend away, your weekend at Bernie's. But I know that you trade SPY. But again, I don't think I'd want to go under the... maybe a pullback into this area here, and then a continuation down if you were to sell. But you can see that on the 15-minute. You don't need to drop down onto the 5 for that.
It really all depends on where we're going to react from, or how we're going to react for now, and where we are right now. We're at the low of Tokyo. We're at the low of the lower end, upper end, let's say, of that box area of ours that we drew the area of interest. It really depends on how we're going to react here. If we're just like slowly trudging lower with no real momentum, it's slowed, there is the potential for us to start reversing, pushing bullishly again. However, if we are not slowing down and we start seeing an increase in momentum, we start seeing larger candles, smaller wicks to the upside, or if we do have an attempt to push higher, it's short-lived, and then we start taking lows yet again, then I would say we're going for sells. And it's all going to depend on what is happening within this area where we are right now. Because this is an area of interest for us. Me specifically, and for Will as well. Not necessarily for everybody and their viewpoint around this, but I want to see it slow down. I want to see it attempt to push up, followed then by an attempt to push lower again, failing that, and then turning and starting to push bullishly, and then creating a new bullish momentous move. Otherwise, I want to see it break this area. I want to see it break the low. I want to see whether or not it can actually take this area, break through it, and then start pushing lower. An attempt to push back up, fail that, and start pushing lower. Then I can get in on the sell, as an example. And then I will aim for, depending on where this pullback and the confirmation of the lower, the sells coming in, the confirmation for that, I would then either aim for somewhere low point over here or the high point of this box area over here, which was, or even up over here, the small little area of indecision here. Even this is a nice area to try and test for. So these would be my three areas to potentially test should we have price push lower, retest this low, and then continue lower.
Yeah, fair.
But it's going to depend on how we react.
We're not going to push lower. We're going to go up.
I mean, it may as well just do that. But the only thing that does not put my mind at ease is this absolute sell-off during Tokyo.
I knew we were going to get a sell-off over Tokyo. Like I was watching the markets last night just before the open, because obviously I was putting all this up, so I had my computer on as well, and I was just looking at it thinking, I wonder what's going to happen. So I thought, screw it, I'm just going to sit down. I took a bit of a break after putting all that up. I sat down and thought, I'm just going to look at the markets now, see what's going on, do a bit of like pre-open analysis. I thought, I knew we were going to get a drop. I was like, yeah, Asia's just going to drop, and it's going to try and fill in a lot of what happened, especially over what happened like Thursday, Friday. I thought, yeah, we could drop down to here, but then I think we'll get a pullback and continuation. But dude, like I didn't expect us to have that much of a drop. Like we really dropped. I was like, wow, I'm actually quite shocked about how much of a drop we had. You know, I wasn't disheartened, but it was a decent sized sell-off over Asia session.
Yeah. Miss X Twilight asking, gold consolidating on a 15-minute time frame. Should we wait for some kind of breakout? Personally, I would wait. I don't trade consolidation. I wait for a breakout. I wait for a breakout and a retest. I wait for a reaction off of that consolidation. Well, that's one way that I trade, obviously, not complete. But in general, I would say, as a good rule of thumb, don't trade consolidation, don't trade sideways action unless you have a very specific strategy that you've tested for consolidation.
For example, here,
yeah,
Christian Marcel saying, meanwhile, while let's try
we
again.
can't scalp the range. Exactly.
Meanwhile, we can scalp the range. Yeah, thank you, Richard.
Yeah, exactly
Help me
that.
out on that one.
If you have a breakout strategy, wait for your breakout. If you have a break and retest strategy, wait for your break and retest. If you have in this case, a range scalping where you sell the highs of the range and buy the lows of the range, wait for that. That's what I would say. So
100%. It's the only thing I can recommend when people say, "Shall I buy? Shall I sell?" Follow your plan. Shall I trade consolidation? Shall I trade high volume? Shall I trade high impact? Follow your plan. Never trade consolidation if you have a trending strategy. Never trade a trend if you have a range and scalp strategy. It all depends on the strategy that you're trading with. But yeah, no, definitely take into consideration that.
That's where the adaptation in trading comes into play. It's not necessarily to say that you only have one strategy and you only follow that one strategy. You can have multiple strategies, but then you need to have the patience and the willingness to say, you know what, I see that we're consolidating. I'm either going to wait for my breakout strategy or I'm going to switch over to my scalping / range bound strategy, and I'm going to see how that plays out. So you need to have the patience, but at the same time you need to be able to say, you know what, this is not really what I'm looking for. I'm going to sit out.
Dude, well, look at gold on the 15, man.
Yeah, it's a nice little candle. I mean, on the 5-minute, we're starting to show an attempt to want to push higher.
Ever so slightly. We're trying so hard, but it's...
Yeah, we're trying. So if I just switch on my 2 indicators again, to me, this is just sideways. I can immediately see that there's no breakout yet. There's no... Because look at this, mate. Like, if this is the high, this is a low swing. This is a lower high swing. This is a lower low. This is a higher low. Higher high, sorry. This is a lower low. This is a lower high. This is a lower low. This is an equal high. Like, if you drew a line straight through this, you would... It looks like a downward channel. But there's no momentum. There's no volume. There's no, like, push to push it lower. In all likelihood, it might just break above this point, attempt to come back down, and then continue back up again. But I'm not going to trade it while it's doing this, because there's no form to it. There's no structure. It's higher, lower, higher, lower, 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 higher, lower, higher, lower, lower, higher, lower. It's just all over the place. No interest in this whatsoever. I would wait, personally. I would wait. Please do a discussion on trading journals. What would you like to know about a trading journal? Yeah.
Yeah.
So
it depends what you mean by trading journals. What do you want to know? What to put in it, or the importance of it? Because, dude, journaling, in my opinion, one of the most important things you can do. I actually got quite lazy with my journaling at one point, and I suffered for it. So, in fact, I need to do that now. I need to go back and do some re-journaling, catching up.
A trading journal is a great tool to use so that you can go and look back. Let's say hypothetically, I'm a bit annoyed today, and I take a trade and it doesn't go my way. I'm annoyed. So I'm going to write down in my journal exactly when I entered the trade, why I entered the trade, what confluences were or were not there. So I would give all the details surrounding that specific trade. But what I would also do is I would also write down what I felt while I was taking that trade. Did I feel a little bit of FOMO? Is that one of the reasons why I took that trade? Did I feel a little anxious while I was trading? How did I feel on the day? Did I wake up on the wrong side of the bed? That kind of like stuff. So almost like the way that you would journal a personal journal. Your thoughts, your ideas, but you condense it to psychology and the trading itself. And in future, if you have that same feeling, you can, like that feeling of FOMO, you can, but hold on a second, I remember I had that feeling of FOMO on that specific day, and you can go back to that portion within your journal and you can say, same feeling. So how did it turn out on that day? Ooh, that was my worst trading day of the year. I lost X amount percentage, as an example. I'm not saying that that is what's going to happen, but you have something that you can go back to and you can go and look at it again. The problem with our minds are we forget things. I'm going to not write anything down now for this horrible day that I've had. The next time I'm going to have a day like today, there's going to be signs. And then if I don't have that memory, that thing to fall back on to say, on that day when that thing went wrong, this was the outcome, or this was the higher likelihood of that outcome, that kind of like thing. I'm just going to forget about it. And I'm going to do the exact same thing over and over again. And I'm going to be angry because I lost my trade yet again. I'm going to be angry because I FOMO'd into a trade yet again. So the idea is it's like a hindsight assistant. You write it down today so that your future self can come back to it again and have a look at it and say, you see, on this day, this thing happened. And this is what I decided to do. It's a great tool. And like Willa said, when you start using it and you start getting into the habit of using it, you rely heavily on it. And then when you stop, you realize, I need this thing.
You don't realize how much actually that helped me a lot in my trading journey.
Like half of the problem or half of the solution for a problem is writing it down. So if you've experienced something negative, write it down. But use the same logic for when something's going right. Write it down so that you can reinforce that idea. You see, if I wake up and I go and touch grass immediately, I'm standing in the sun, I get some rays of sunlight on me and whatnot, and I then go and trade, I make better decisions. Then at least you have some sort of data to support this. Because you've written it down, you've journaled about it.
Yeah, exactly. I like this as well. Top 5 topics which every trader should master: psychology,
risk
management, health. I thought we were going like I do one, you do one.
No, dude, I will always vouch for risk management, always.
Yeah, 100%. So like a lot of people as well, when it comes to health, they don't take this serious enough, because healthy body equals healthy mind, and a healthy mind in trading is so key. Risk management is absolutely up there, top. Psychology again is just it needs to be mastered. Or is best to, and then patience again sort of comes under psychology, but it doesn't. Expectations is psychology almost. Emotions would be psychology. Patience, and then one final one. Discipline. Show up every single day. That's discipline. Patience. Make sure that you're going to wait for the right setups. Psychology, make sure that you're doing it for the right reasons. Make sure you're aware on what's going on. Risk management and health. Make sure that you're staying healthy in mind, body, and soul.
I would change the question ever so slightly. Top 5 topics which every trader should aspire to improve. I don't believe in the concept of mastery. The reason why I don't believe in the concept of mastery is because if you've mastered something, there's nothing left for you to learn. Okay, you're the master. Yeah. You've reached the tippy top of the mountain, and then there you are. The problem is, every day in the market, every day that you are putting a trade in, working on your psychology, working on your emotional state, working on your physicality, all of those things. It is a new attempt every day. Every day is a new day. It's literally that. It's a new day.
Mm-hmm.
The thing is, if you're a master, you're going to quit. You're going to say, you know what, I know everything. And then you're going to start losing the most important thing, which is the consistency. Because the things that you put into place, the actions that you took while trying to become a master, you're going to stop doing those things because you believe that you've achieved this master level. I would want to stay a student of the market for as long as I can, because it means that every day I've got something new to learn. Even though I'm relearning something that I've already learned, I'm reinforcing it.
But wouldn't that mean that you've mastered? Wouldn't that mean that you've mastered it? By mastering it is the ability to understand that you're going to forever learn.
So,
because it's a.
Can you do a squat? Can you do a squat perfectly?
Oh, I don't know. I don't know. I'm
Okay, so
maybe.
let's assume you can do it perfectly. Can you do it perfectly every single time you do a squat?
Probably not, as it gets heavier now.
But you're a master, mate. You should be able to do it perfectly every single time.
But a master doesn't mean that you can do it every single time. A master knows how to do it every single time. And a master can acknowledge that he may not do it perfectly every single time, so therefore he's got to keep learning and finding better ways to do it. Mastery doesn't come through...
Mastery is,
but it is, because mastery could be an ideology. Mastery doesn't have to be the physical thing of something. You know, mastery doesn't have to be... I know this. Mastery could be, I know that this, it cannot be finished. That's mastery. So like, if you look at...
I disagree, mate.
I
disagree. I don't think there is such a thing as mastery. I think it's the same as perfection. Perfection is in the eye of the beholder. It's what I deem to be perfection is perfection. But it's not going to be the same for you. It's not measurable. Perfection is not measurable. And for me, mastery is also not measurable. Because the moment you believe that you know everything is going to when you stop putting in the effort. It's going to be when you're going to stop putting in what is necessary to maintain a certain thing. And then it's going to dwindle. Yes, you know what you're supposed to be doing, but you're not doing it. Ergo, you're not mastering it. Ergo, you're not a master. So the idea is, I want to stay a student, because being a student means I'm humble enough to know that I don't know everything, but I have this yearning to know everything, so I would put in the effort to try and know everything, even though I know I'll never know everything. It's that 1% better every day kind of like thing.
I fully agree with that, but I also conform to the idea of mastering psychology is understanding that you'll never master psychology, but that is mastering the art of psychology, is understanding that you'll never truly master it.
Nah.
You know, like...
I cannot conform to the idea of mastery, mate. I cannot conform to the idea of mastery. It's the same reason why I cannot conform to the idea of perfection. It just doesn't exist, mate. There's always going to be somebody that either knows more or has tried more in a field than yourself. And up until you can prove that you've done everything, which we can't prove that we've done everything, you're not the master, mate. But okay, we'll leave that one there.
Interesting debate, guys. Let us know in chat. What do you think? Mastery, possible or impossible? Because I don't know. I think mastery is more of a philosophical thing. I think mastery is philosophical, not a physical thing.
Fair. I
do fully agree with you. Yes, you can never. You know, if you're the smartest man in the room, you're in the wrong room. That's simple. That's simplicity. Once you learn everything, you know, you'll go downhill. You can never learn everything. You know, you can never be. You know, like I may be the best person in this house at trading, and then the minute I go into a different house, I'm the worst person. I may then become better, and then once I become the best in that house, I go into another house. Once I go into that house, I'm the worst. You know, so for example, it's all relative to your situation that you're in. And so therefore, I fully agree with you. Mastery cannot be mastered. There's no such thing as mastery. That is why mastery is an ideology. Mastery is false. To be able to master something is to understand that you cannot master something. So therefore making it philosophical, meaning that you can master through psychology because you know and acknowledge that you'll never master it.
So by saying perfection, I'll never achieve perfection, and that in itself is perfection, I am perfect.
Yes, exactly. Because
it's cannot be achieved. Realized cannot be achieved. That's basically what you're saying.
No, 100%. It's called satisfaction in one. So like what you can do is you can acknowledge that you may not be perfect in other people's eyes, but in your eyes, providing you can be better each day, then you are perfect in your eyes because I'm constantly improving. To be constantly improving is perfect because perfection comes through through the process, not through the end goal.
Okay, so if I adopted everything that you do on a daily basis, am I going to be exactly like you?
No, because it's relative.
So the process is also not perfect because it's not repeatable by other people.
No, it doesn't have to be. You're perfect in your position.
Yeah, that's why it's called eye of the beholder, mate. Like in my eyes,
exactly
I am.
Yeah, 100%. That's what I'm backing up.
But
mastered.
It's not going to be either one of ours definition of perfect, as an example. So to me, I'm perfect. To you, you're perfect. But the concept of perfection doesn't exist. The concept of perfection is unachievable.
Yes, 100%.
Because it's not a measurable thing. It's not something that is agreed upon by the majority of people, as an example. So even your peers would not agree that you are perfect because they themselves consider themselves to be perfect, as an example. So the idea of it is perfection is not measurable. So
yeah, perfection is not measurable. I fully agree with that. But perfection and mastery are two different things.
Yeah, no, I was using perfection as the conceptually as the same idea.
Oh, okay. Yeah. So I fully agree. You know, perception is completely different to mastery, of course, but mastery I see as an ideology, not as something achievable.
Look at Ewan, like even masters
I totally disagree. I totally disagree with you guys completely.
There we go. We don't need to do it.
I think everything is measurable. Perfection is measurable. I'm just playing with you guys. Hello, everyone. Instead of ringing the doorbell, I said I'm gonna barge in and just shake everything, shake the argument,
run into a room,
argument you guys were having.
Throw the seats and everything around, upend the cushions and stuff like that. And look people in the eye and they turn around and walk out. It's just like, okay.
Exactly. That's my that was exactly my idea.
Yeah.
Use that as a doorbell instead of an actual doorbell. It is the way I come in.
Victor is the right.
How are you guys doing today?
Yeah,
good man. Yeah, I'm really good.
Yeah, we're good. Victor.
Nice to get a good debate going at the end as well. That's what I like that.
But don't let me hold you back. Continue.
I got to shoot real quick. I'll be back. I'll try and pop back in 2 seconds to finish this debate.
By the way, William, before you go, what an amazing background, man!
Yeah,
what happened?
I know. Happened? Super cool, isn't it?
Wow! Someone is upgrading.
I know. Yeah, I know. I'm trying to professionalism at its finest, my man.
Oh, nice. Good for you.
He's taking the new year, new you to a whole new level, but he's doing it a little bit earlier than everybody else.
I couldn't be dealing with everything looking empty and cold on stream. Like I said, it happened after doing some of the trader interviews. I was watching them back, and I was looking. I was like, dude, I don't like my background. Like, I look cold and dark and dingy. I was like, I'm gonna sort that right out, and yeah, I have.
It looks very, very, very nice. I like it. I like it a lot. Look at someone. Ooh. Richard, by the way, I didn't mention you yet or anything about you, but you look particularly organized today.
Why, thank you, Victor, for noticing.
Yes.
that I'm very well organized. No, I went to go and have my hair cut just before the stream. It might not look so for a lot of people, but I was a wild man this morning, and for a while now, I had a bit of a trim as well. So I feel nice and clean. I feel nice and almost professional looking, almost.
Almost. I have to say though,
mosquito bite on my forehead where I got absolutely destroyed by mosquitoes last night. So it's a very itchy morning for me this morning.
I have to say, Richard, I like the trim. Love it. Don't misinterpret what I'm going to say next as a discouragement. A discouragement to keep trimming. However, I must say I always liked your untrimmed version, and it was sort of a statement which I like a lot. Like I am myself, and I'm proud of it. I'm proud of it, and I'm not gonna conform to society. No, I'm gonna be myself. This is me, and that's it. You gotta deal with it.
A little bit.
I love that. I love that.
Little bit hair all over the place. The thing is, I have like 3 crowns. For those of you who don't know what a crown is, it is this golden thing. And I'm just joking. A crown is an area on your scalp where the hair grows kind of like in a spiral. And I have 3 of them. I have one in the front here. I have one here, and I have one at the back. And you will testify to this. When I rock up on stream in the mornings, I have this like
perfect storm.
Just a little bramble of hair, just kind of like stuck in this area. And if my hair gets too long, it does not conform. It I don't know, it becomes an anarchist or something. It just does its own thing. So
I don't know if it's something cultural or not, but I don't know. Maybe it changes with culture as well, or even geographically. But my grandmother would say, if I'm not mistaken, they have sort of a superstition.
Yeah.
That if you have just one, if a child has only one crown, not the yellow one, the one you mentioned, they're gonna be calm and quiet and composed.
Okay.
And if they have 2, they're gonna be a bit more active. But if they have 3, they're gonna be all over the place.
Interesting. I didn't
know. I am a little bit all over the place.
Yeah, I got a double crown and a cow's leg. So I don't know what that means.
So you're a little wild, but I don't know what the cow's lick is referenced to.
Yeah, I don't know what the cow's lick, but I don't know if that means anything. It means that I got really frustrating hair to try and style. I know that much.
Dude, these are my combs, mate.
Same as that. I literally
even though my hair is mostly unkept and I have like the just bed head, wake up in the morning, just do this, done.
In all fairness, I literally woke up like this morning. That's quite.
You mean you woke up sitting talking to us?
Yeah, I did. It turns out I fell asleep at my desk. I was like, oh, I'm on Fiverr stream now. Hey guys, we're good.
Yeah. But coming back to the debate of perfection, mastery, and being able to not master the mastery, which is the perfection, which you guys are looking for, or did I just lose myself in the description?
You probably weren't far off.
No, yeah, I think ballpark figure you were close.
Yeah.
Okay.
We were discussing the idea behind mastery. I fully agree. So Rich was explaining how he thinks mastery can't be achieved at any point, and once you achieve it, you won't ever master anything again because you've got nothing else to learn. Now, I fully agree with that, and due to the fact that I fully agree with that, I think you can master the idea of learning 24/7. So I think mastery is something a little bit more philosophical, where you can potentially master the idea that you are never going to master something, that you're forever going to be the learner, and therefore you can master your psychology by understanding that. Thank you. I got this few on me. Like I said, the person today about my tattoos. I got them all the way down here as well. They go all the way.
Are you gonna be stripping to for us, William? What are you doing? This is a PG stream, William.
This is not one of those
behave.
streams, guys.
It's gonna be the Christmas stream, guys. You need to be here for it.
Oh my god, should we get a $5ers calendar?
An advent calendar.
Oh no. I mean, maybe. Get like a, you know how you get like a fireman calendar, or like a horsey girl calendar, or like a farming girl calendar with girls on tractors. Should we get?
Yeah, I think we should definitely get it, but instead of physique, it will be like in setups. What do you think?
Yeah, how sick would that be?
That would make a lot more sense. So you
exactly.
January with his trading style, and then it's an advent calendar. So for the first day of January, you also get like LJ's favorite drink, and then next day LJ's favorite chocolate, and so on and so forth for every host and co-host for each stream for the rest of the year.
I love that. I think that would be sick. We could call it only 5ers.
Oh no! Oh my word, MGN.
I love that, MGN. That's amazing, dude. That would be sick. We could have like January's Victor's setup, and then you have like Richard Butler's February setup, and then like Will Davis's like March setup. You know, LJ's May. You know, like so forth. How many hosts do we have? How many hosts and co-hosts do we have?
I have less count. We have it's been
12.
growing. So I lost count.
Yeah, I'm sure.
I feel like there's enough of us for one per month with an advent calendar for every day of that month. I'm gonna send Jonatan a message.
Let's pitch that idea.
Let's
pitch that idea to Jonatan and see what we can organize.
And remember, it was Richard, William, and Victor that came up with this idea. It's our idea.
Do we get
royalties, baby? We want royalties.
I was going to say, do we get royalties?
Intellectual property. That's what it is.
Yeah. Dude, that's so funny. Bobby Fischer, Vic's laugh is contagious. Dude,
Victor's laugh is pretty awesome. I do like Victor's laugh. So,
everything else about Victor I don't like, but his laugh is good. Joking.
Did you just say there's something you don't like about Victor? Remy, can you remove William from the stream? What is this? Okay, don't remove him.
I'm joking, Vic. You know.
Yeah, we have spent a dinner and a couple of beers together, William and I. So I know he's just joking.
Yeah, dude, that was such a good. Like, do you know the thing as well? I felt awful, and like I've told so many people this, but I've not said it often whilst you've been around. I met Richard Wells for the first time. I've known him for like 2-ish years now, and I've streamed with him. We've got a really close relationship, and I met him for the first time in September, and I turned around, and it literally it went like this. He is so tall. I was like, hey Rich, what's good, man? And then I met Abe, and dude, it embarrasses me to this day, because then I looked at Victor and I looked at him directly dead in the eye, and I didn't recognize him. I didn't know. And then it took me, I'm not like, I had my public speaking head on anyway, you know, so like my brain wasn't 100% there. Like, even with Rich, you know, I can speak to Rich all day, but like I hardly spoke to Rich. I was like, hi Rich, bye, and I walked off. So like I felt so awful, because then we were chatting, and I was having a cigar and a drink at the end of it at a bar that we all met at, and then Rich was like, oh, Vic's gonna be here in a minute. I was like, no way, Vic's come in. He was like, Will, what the hell are you on about? You literally you spoke to him earlier. I was like, oh my god, yeah. So yeah, like Victor, man, I'm so sorry. I didn't even recognize you.
To your defense, probably I would be in the same state of mind as well. It was like minutes, like 3 minutes before your interview, before a crowd. You weren't. I was there, but I'm pretty sure you were, dealing with, the interview that you're gonna be giving, and not with the new. There was people everywhere, new faces, and I don't know if I would be any different to me in that same situation.
But yeah, no, in all fairness, once I realized it was Victor and I'd apologized and gotten over the fact that I was so embarrassed, then no, we had a great evening. It was super fun. We had a nice meal.
The only thing about that whole story that I was like, I can't believe this, is the fact that you didn't recognize his voice.
I know. In all fairness, like we didn't like I said again. I had the interview in my head. I was preparing to go on stage, and like we didn't really say much to each other. Like
that's the thing.
Victor was more like hello. It was like a really quick interaction. Otherwise, I probably would have recognized his voice. I'd have been like,
Victor, you probably thought that William was the most like.
No, that's what I thought.
Like, he didn't even acknowledge me. I've spoken to this so many
That's why I was so embarrassed. It wasn't the fact that I didn't recognize him. Like I was thinking, Victor doesn't care that I probably, didn't recognize him. He probably thought, what an ignorant shit, But
not really. Not really. I knew the situation was tense to you. Yeah, so and we didn't really talk. Basically, I shook your hand and said, hi, how are you doing, perhaps, or maybe not even that. And that was it, because you were already... Yeah, you were in a conversation, and I didn't interrupt the conversation. You kept going until you had to go. So we didn't really have much of a moment or interaction.
Yeah, we didn't have time to properly talk.
Exactly.
Until, after, in the evening, and then I knew exactly who you were. I was like, this is Victor. I was like, exactly. You cannot miss this guy.
I was jealous.
Yeah, it was a lot of fun.
Yeah, it was a lot of fun.
Well, we should get together the next time, the whole team.
100%, man. That would be super cool.
Can you imagine that? I still have the idea of a boat in the middle of nowhere, and we're all on that boat. Not a boat, a yacht. We'll have the 5ers get together on the 5ers yacht in the middle of the Indian Ocean.
I'm sorry, Sol buying a yacht now. Sol, you're buying a yacht. Sorry, mate.
What makes you think that Sol and the 5ers doesn't already have a yacht?
Maybe.
You need to be in the 5ers inner circle, mate. I'm joking.
Leaked information, Rich now knows.
You're spilling all the beans, Richard.
Yeah.
Yeah, you're spilling all the beans.
From now
you're not supposed to be telling that.
I'm going to keep quiet from now on because I feel like I am divulging too much.
He's going to get a message.
Next thing everybody's going to know about our get-togethers twice a year, once in the Alps and once in, I don't know, the Australian outback. I've done it.
Why not like the Bahamas? Bahamas and the Alps. That makes sense. Why the outback?
It's the outback, mate.
Survival mission with the 5ers.
Yeah, it's just the outback, mate.
Someone said gold breaking out, and looking at the charts, that is indeed happening.
Yes.
Not for me.
Have you guys... I'm just saying, you guys are watching my screen. That's exactly the idea. Since we had it reached target, we had from this order block on the weekly time frame, where it came and touched ever so slightly and then changed direction to hit that TP. Beautiful. So we can take that off, but we can maybe mark it as something else, because it's no longer a TP. Now it's a level that is now broken. That's on the 4-hour, and that will be used as, on the lower time frame, will be used as a flipped resistance into support. Actually, it's already happened, as you can see here. The price comes back and hits it. First time it breaks, and turns to be a fake out. The second time couldn't hold it, but now it's clearly been doing it a couple of times. Look at this beautiful retest, break and retest that is. That's before it continues, right? Look at that. And again, beautiful. I like that. That's actually how I scalp the market, by using higher time frames, levels, and structures on the daily, weekly, H4, and then go to the 1 minute and scalp them for a couple of pips. Beautiful price action here. Are you guys in any gold trades?
I was, but I took out as about $80 loss. So
okay,
it was an interesting one. I'd actually be in some nice profits right now, but it just, my discretion kicked in. And the way it broke and closed under as well, like even if my discretion hadn't kicked in, it would have invalidated my trade and I would have been out to break even. But it was a shame. Having said that, we haven't quite got what I want to see yet. I want to see a break and close above the next. Like, we've wicked the high, but we haven't closed above it yet. So once we close above it, then I'll probably look for some gold longs. But I'm done for the day now. I'm currently in my swing trades on US 30, the NASDAQ, and S&P. So just waiting for them to, start climbing up now, I think.
When you say wick above and you're waiting for the close, what time frame are you talking
That's
about?
the 5-minute time frame.
Okay.
And in fact, and the 15, the 5 and the 15.
Okay, so you're talking about this. I see that. That's a beautiful information here for our viewers.
I want to break and close above that, I think.
There, I like that. I like that indeed. That's the I like that. That's a opportunity, because this can be, it can go either way, right? It can push and continue, which I think eventually it will, but in the interim, it can, this wick and this, not failure to close above, but not done it yet, that opens the door for rejection, even if that's only for the time being.
Yeah, exactly. Anyway, guys, I thought I'd pop back in. I just about I managed to get onto the phone call, but I had to get off pretty quick. So, yeah, so I thought I'd pop back in and have a laugh with you guys. I love coming on and chatting with you, Victor. It's always a great laugh. It's always good fun. So I'm going to love you and leave you, and I'm going to head off. I'm done for the day. I'm just in my swing trade, so I'll check out how they're doing. And yeah, that's me done trading for the day, I'm pretty sure. I probably won't enter back in on gold now. I've taken, for the day, I'm down $287. So I think that's me done. So I'm pretty happy with that. So guys, for now, thank you and goodbye. Make sure you smash out that like button as well, by the way, guys. How many likes did we get? Did we get to the 200? I don't think we did. I think we got like 170. We got 160. Okay, there we go. So guys, smash out the like button. Get interacting with Victor, and I shall love you all tomorrow. But for now, good night.
Take care, Will. Thank you very much for your company, insight, wisdom, debate. What else? Humor.
Tattoos.
Lightning. Efforts. No, but no joke aside. Thank you if you're still hearing us, Will. Rich, we have talking about the virtual yacht of the 5ers, and we have a couple of questions here. One is directed to me, and let's say the other one. Good day, new to the 5ers. Have a question? What happens after you achieve the target for phase 1 and phase 2? At what point would you be notified and given the credentials to continue trading? Would you like to answer that? And I'll answer the other question, the Mix X Twilight 88.
Yeah, sure. So I'm assuming it's Alicia, or it's at Alicia. So I'm just going to say Alicia. When you've reached the phase 1, you've reached a target on phase 1. Generally, it's very quick. It's within 2 days you will have your credentials. Depends on if it lands on, the email is sent over a weekend. Maybe there's some internal issues, but generally it's within 2 days you'll have your credentials for phase 1 and phase 2. Normally with phase 2, it can take a little bit longer, because sometimes what will happen is they first need to go and review all of your trading during evaluation phase 1 and phase 2. But I would say no longer than between 3 and 4 days maximum. And you will receive an email stating, congratulations, your credentials is in the hub. And then you can go into the hub, you can go and get your credentials where you got them for your phase 1 and phase 2. It will be there. So I would say no longer than 4 days. But that's like assuming something went a little bit wrong in the background, or they were overwhelmed with the amount of new accounts that have passed evaluation or something. But in general, it's very quick. It's generally very quick.
Yeah, it's usually quicker than 4, but it's safe to say 4 because, you cover most of it. But it's usually much shorter than 4. And it also depends on what program you are, because if you're on hypergrowth, you're already, hypergrowth is you win from passing one phase already. So you wouldn't even have phase 2. And if you're in boot camp, if you pass phase 2, you still have phase 3, because bootcamp is a 3-stage program. So we're talking about the high stake, which has only two phases. Yes, let me check here. Let me double check here the question we had. Someone asked about the virtual yacht. Well, let's talk about that. The virtual yacht is about 31 meters long and has a cabin. No, I'm just kidding. It's
got
just
multiple
a little joke
cabins.
We had. Yes, but it has a main oak wood cabin in the middle, which is as big as a ballroom almost.
Yeah, it's got beautiful cherry wood inlays in between each one of the center posts that holds up this beautiful ballroom. The countertops is the best Italian marble, obviously.
No, but Ham, it's just a joke. We it's needless to say, we're just poking fun around. But we do have one question which was directed to me, not by Alicia. I think it is Alicia. I'm pretty sure it's Alicia, but it's not Alicia. This is by Miss X Twilight 88. Thank you for the question. Victor, do you use H12 and 8 time frames to identify order blocks, or only weekly, daily, and H4? Miss Twilight, there was a time where I would use the template that I shared with you guys on Monday. I would use it on any combination of time frames, meaning I would be looking for H8 and then I will multiply it by between 4 and 6, or H12, and do the same with custom time frames, right? That's an idea. I'm just spilling some edges here, and use that, because that is possible, right? It doesn't matter what is the exact specific. It's not specifically to any particular time frame, right? As long as you use the factors in between, the steps between the time frames of between 4 and 6 X, right? When you go these steps from one time frame to the other. So I did use them in the past, but I no longer do that. I could, but I just at a certain moment I needed to simplify in order to get a balance between trade frequency and amount of screen time and all of that. So I automatically stopped doing it. But from time to time, I will confess, if there are no other things that will give me signals, either let's say I'm already in a trade and it's sort of a borderline case, and I know what I'm supposed to be doing. If I want to have a little discretion, and let's say I have reasons to believe that this is one of those moments where my rules do not accommodate the reality, or do not capture the edge completely, because rules are fixed, and I know that there's something extraordinary happening. And if that is the case, then I would look for other reasons that are not part of my system, who that maybe in the future, but currently they're not part of my strategy plan yet, trade plan, and I would then look to H12, H8, but it doesn't really happen that often. Typically, I just go with the rules and that's it. But it happens from time to time where I want to have a little bit more input, then I will use them. But that's different from using them as normally with the actual setup. The way that I use them when the trade is already open is to know. Let's say you have because the way that I upgrade, I have never. Well, maybe I have talked about this in the past, but I've never really explained about too much. But one of the things that I do in order to expand or to upgrade a trade from one time frame to the other is by looking at what time frame, what is the highest time frame that trade has signaled or has switched, has transitioned to buy or sell in the direction that the trade is. And given the time frame, I can then extrapolate with stats what is a reasonable target to have. So that's another way that I can look. Let's say, even though my trade plan doesn't tell me to use the H4 and H12, that's why I don't talk about them, but I can still use the information because I have collected data, and I know from that data that if let's say I'm in a trade and the daily hasn't signaled yet, but the H4 has, and I need to choose whether I still target only the H4 or am I allowed to start looking for expanding that. And that's where an H8 or H12 can help me indicate whether the trade has matured and is justified to upgrade the targets as well. So it's useful because every time frame has information. Not always it's relevant, and sometimes it's not applicable, but there is information to be had on other time frames as well. In the end, I chose not to use them daily because I recognize the power of simplicity. And sometimes for simplicity, you need to just ignore all the noise and just focus on a couple of things, validate that, and only use that for the vast majority of the cases, keeping it simple, less moving parts, less noise, and clearer signals. And that's what I do.
I love that. I really appreciate it when somebody says, just simplify it a little bit more. You can find trade entries on any time frame, and you can add as many confluences as you wish to add to it. But at the end of the day, the simplicity, I think, is the thing that has helped me the most. The simplification, let's rather say. I've said this many times before. Trading is difficult enough on its own. It's complicated enough on its own. You don't need to overcomplicate the actual trade. Simplify the actual trade that you're going to take as much as you can, and so that it is repeatable. So obviously, the more steps there are, the more steps can go wrong, or the more steps you can miss, or the more steps you can potentially not follow as you normally would have. So simplify it as much as you can for the trade entry. I love that. Victor?
I go ahead.
I'm going to have to love and leave you in the next 2 minutes or so. So I will wait for you to ask your question, and then I will give an answer, and then I'm going to have to shuffle off myself.
No problem. No, I was going to say it wasn't a question. It was more of a little experiment for those who are still trying to find their edge or trying to incorporate what we're talking about, simplicity, which is very strong. Don't overestimate the power of simplicity. The effectiveness in your process, in your execution, in your mental equity, because it's simple, it's easy, it's not. Anyways, you get the point. One of the things you could do is, for example, it's not necessarily a complete strategy or anything, but for example, take something that has a reaction, let's say a fresh order block or an outside bar, and try to, for example, this is for the audience, maybe for you as well, for everyone. let's say you have a very, very simple, right? It's, it's so simple, it's not going to have a huge edge. And it may not, in many scenarios, it may not have an edge at all, right? It might be just fluctuating around break even. But there are situations where it will have an edge, and that's for you to find out. For example, if you have let's say an outside bar. You have an outside bar, and I think your 2 minutes are going to go very quickly. But let me continue. Let's say you have an outside bar. Let me check one on the chart here on the H4 perhaps. Do we have one here? Yeah, I do see one here, right here. Right, so you have an outside bar, and you do one thing, very, very, very simple, not using higher multiple time frames, which I talked to you guys. Is not a must, but it's a strong recommendation to do so. But this is for simplicity. Just looking at outside bar in, let's say, in H4, and you wait for for example, that's just one example, right? Look for price to come back, and you put a limit order at the open. In this case, it's a bullish outside bar at the open of the bar number 2, and you play with that. Very, very simple. Outside bar, put a limit order, put a stop, and you can play with that as well, depending on the pair and the time frame. You have to expand it and adapt it, but choose whichever feels okay. And then go to 1-to-1, let's say. Very, very simple. It has very little components to go with, and try it for a couple of days. And see how liberating it is to keep it simple. And
I like that, liberating.
Right? It's so liberating because you don't have to think about anything else. You just look for the outside bar, you put the limit, and let's say you put, because it's H4, you put it for 10 bars to expire in 10 bars, and that's it. So it goes. You don't even have to babysit it. You don't have to manage it. It's set and forget. Either it gets triggered or it gets expired, and if it gets triggered, it gets either to stop loss or TP, and that's it. You just have to be, and you can put a watch your market every 4 hours, which is very comfortable. The rest of the day, you can do whatever you want. And try it for a couple of days and see what I mean with simplicity. It's regardless, it's not going to have a huge edge because it's, you gotta stack the odds more in your favor using multiple time frame and optimizing the system, the entry. This is just one idea. It doesn't have to be the open. It can be halfway through. You can just put it at 50% or 25%, whatever it is. It doesn't really matter. But it's about the simplicity. Try it out and let us know what you think about it. There, I think it was almost like 4 minutes.
Oh, that's okay. The fact that I get to sit and listen to you talk about something like this, Victor, is worth every second. So I'm not going to complain. But with that, I am going to bid thee au revoir, and I am going to see you all tomorrow. So everybody that hasn't already, please, I beg of you, alsjeblieft, please, press that like button if you did like today's content. If you didn't, I'm sorry, but please still press it in anyway. And then if you haven't already, please subscribe. And to everybody else, have a lovely day, have a great day, stick to your plan. And for Victor, love you, my friend, and I do hope that you have a great day further, and then I will see you tomorrow.
And before you go, you said one word that I didn't know. You said something when you said please. You said please?
Alsjeblieft.
Alsjeblieft. And that means?
Alsjeblieft means thank you.
Okay.
Not thank you means please in Afrikaans. Yeah.
Alsjeblieft. All right.
Alsjeblieft. Yeah.
Well, alsjeblieft, Richard.
Thank you, guys. Have a great one. I'll see everybody tomorrow. That's it. That's me. Cheers. Goodbye.
Thank you. Awesome. All right. Here we are again. Let's look at the at the chat. We have a couple of questions here, at least one. Alicia asking, I made a target last night, so I have to stop trading. I'm not sure I get the reference. Did we? I'm not sure what was the first thing you said. Okay. Oh, okay. So it's a follow-up question. Once you actually, if at the end of the day, the account is, once you read all the targets, at the end of the day, it will get, disabled. So once you reach the targets, there's no need for you to do anything, right? And especially don't trade. Why would you? You already reached your target. Just wait for the end of the day, and it will be, it will be disabled, and you'll move on to your next phase. If that was the question, let me know. So yes, stop trading is the best thing to do in that case. Let's see. Yes, the virtual yacht only exists in the virtual world. Thank you for your questions or your comments. All right, so Shubham Deshmukh, how are you doing? Thank you for coming to our stream and sharing your thoughts. Let me check here. Let me expand the view. All right, so it says, Victor, I'm really struggling to clear my 100K phase 2. I suppose that's yes, that must be high stakes. 4 times I came in profit, then went back in drawdown. Okay, equity yards is just up, down, up, down. My friend, that's a good question, and that's something everyone is going to have from time to time, because almost no strategy, no matter how good it is, how good the edge is, cannot climb consistently. There's going to be drop down periods, and there are going to be losing periods. Drawdown, if you go in a losing period, usually that is already drawdown, but I mean, they're not always the same thing, right? So what I would do is I would review my trades to begin with. If you think that there is a period where you're not going anywhere, and that does not have to be necessarily wrong. Many strategies have a period where they are climbing, right? They're profitable, and they have another period where they're basically break even, and another period where they're losing. It is quite likely you are break even, right? You're in a period for your strategy where it is normal to be break even, or it is common, it is okay to be break even. You can do stats, you can break down, let's say, your month, depending on how many trades you have in a month, or your year, and you can see how often do these periods occur, right? Maybe you have, from the 12 months you're trading the strategy, maybe you only have something like 4 months of profit, or even depending on what type of strategy it is, right? And risk reward ratio, win rate, and all of that. But you may have something like 50% winning profitable months. And you might have, let's say 4 months of sideways movement. It's totally normal. And then 3 months you're losing. And that can be a profitable system where there's nothing wrong with the system. That is just the characteristics and the behavior of a system where you're only winning 5 months of a year, and the rest you are either break even or even losing, closing the month as a losing month. And if you can understand that it would be, if that is the case, if that is the profile of your system, you can understand that it will happen almost half the year that you might be even in a losing or a break-even period of that system. Even if over the year you're still going to be most likely in profit, right? That's perfectly normal. So what I would do is I would gather as much data I can through backtesting, right? And I know it takes a lot of time and effort and all of that, but it's all worth it, right? Because how do you know you're not wasting time? How do you know that this is normal? Because just because I said so, I don't know the system. It's just one possibility. So you got to have data in order to understand whether or not this is normal for your system. And if it is normal, then you just have to be patient. Keep doing what you're supposed to be doing. Maybe work on the side on other strategies to complement this one if you think the periods are too long. But you just keep on working and doing what you're supposed to be doing. And if, for example, it never has in your backtesting, in your data collection, it never had a period of, let's say, more than 3 months losing streaks, and now you're in your 4th or maybe in your 5th, and you have enough data to conclude that something is wrong because it's not behaving as before, then maybe it's time. Maybe before that it was already time to either stop using it or lower the risk, so you can gather more information to do some diagnostics to see whether the system is wrong, something has happened in the trading conditions perhaps, or the market simply has, market conditions are changed, and the strategy no longer is capturing the edge that it was capturing before. So I would say I would inspect if I will gather more data, and let me put the the question here for those who are coming in at. Here it is. So I would gather some more data. If you don't have that, and I would go over my trades to see whether I follow the plan or not, right? Sometimes, a lot of the times, if your system isn't rule-based, it's quite likely, if it's discretionary, it's quite likely that you deviate through time, and you're trading something that you weren't trading before, and you will get different strategies because you're not trading the same kind of strategy. So I will start there, gather data, and review my trades to understand what's happening, right? Maybe you can find the cause right there. Yeah, that's my advice to you. Hopefully that helps. That is helpful. Let's check here. Let me zoom this a little bit out. There you go. All right. So. All right. The outside bar. Yes, it's a very simple. It's a strategy in its simplest form. And I'm gonna give you guys. Yes, last week we had a whole week where we had, every host giving a strategy, and I'm gonna give you. This is a bonus strategy on top of what we discussed yesterday. So an outside bar, I'm gonna move this. Let me change there. Right. So now here we have an outside bar. I'll tell you guys what it is. Actually, we have a couple of outside bars there. Right. These two candles. I'll make it bigger. All right, so these two, the definition that I use for outside bar is that bar number 2 needs to exceed the range of bar number 1. And I'm gonna mark each one. This is bar number 1. Let me change the color here so it becomes more visible, or that's not too bad. And this is bar number 2. Right, so the green one is bar number 2, right there, and that's the first one is, this is bar number 1. I hope that's clear, right? So very, very simple. So you have, it's a 2 candlestick combination, and as you can see, this is its high and its low of bar number 1, and bar number 2 took out, right? The low of bar number 2 went below the low of bar number 1. And the high is above the high of bar number 1. So it exceeded both ranges, right? And it closes outside of said range. In this case, it closed above, and that makes it a bullish outside bar. And if it closes below, the range of the previous bar, it would be a bearish one. Very logical. Now that's a very powerful candlestick combination. And this is not a strategy, to go use on live account or anything. It's just a good practice for using a very, very simple strategy, and just for you to get some exposure how it feels to use a simple strategy. And obviously, in order to use this profitable, you need to add a couple of things here. It's not going to be profitable, all over the place. You'll have to find the profitability. It is profitable, but you have to investigate, do your homework to find how to make it profitable. Okay, as with many strategies. Okay, so what you do is, so you identify the outside bar. So once you have the close of this bar, right? You have the close of the bar number 2. That closes here. What you then do is you put a limit order. Okay? You put a limit order, and in my case, or not in my case, what I call an order block is from the body, basically from bar number 1 to the extreme, because this is a bullish order block. So it goes to the extreme, to the down, the lower wick, the lowest of them two. That is what creates the order block, right? So that will be an H4. Once the H4 order block is created, not H4, 8, but H4, whatever time frame, you can use H4, H12, whatever it is, and you choose a rule. It doesn't matter what rule. Something inside the H4, but it needs to be just one rule. It can be the upper border, it can be the lower border, it can be the open of the bar number 2, it can be a percentage of this, 50%, 40%, 60%, 75%, from the top, from the bottom, doesn't really matter. Just use any percentage or any rule, just make it simple, something you can execute quickly, right? Let's say you use the 50% right here, right? So you measure from here, the outside, the order block, and that would be 50% retracement, right? So, well, not retracement, 50% of the order block. So that's the 50% of the order block. That's where you put the limit order, obviously long, right? So it creates an order block, an outside bar creates the order block. Take half the midpoint of that order block, you put a limit order there, and you just wait for the market to come back and tip it, right? What you put with the stop loss, you decide. What you target, TP, you decide. 1 to 1, 1 to 2, 1 to 1.5, 1 to 3, whatever it is that you think it is. But keep it simple. 1 to 1 to begin with is not bad at all, right? And you put it, let's mark it. Right, so you put it, whatever you do, the stop should be below that order block, right? But because that makes sense. That's the structure that is presumably is going to make price move away. And once it's created from this moment, you can put a limit order, put an expiration. Let's say, depending on the time frame, 10. Let's say 10 or 12 or whatever number that you think is suitable, and let it expire a number of candles, right? 10, 12 candles after the creation of that order block. And that's it. You walk away, put your TP in, your stop loss. That's it. That's a very, very simple strategy. It's not hugely profitable, I have to say. But it's not about the profitability. It's not for you to, get funded with that strategy, although you could if you do the homework. It's about the simplicity of how using a simple order or a simple strategy that maybe 1 to 1, or maybe you go for 1 to 2, and see how simple it is. And if you use it on the higher time frames, it takes very little time. You only have to, you can even have an indicator that indicates outside bar. You can have them coded, and only indicate the outside bar when they are created. You get a notification, and you decide to put the order or not. That's it. Very simple, right? And it's about the simplicity. In order to make this to be a robust strategy, you have to do multi-time frame analysis. You have to do optimizing and use perhaps some indicators or more stuff to it, right? But that wasn't the point here. Just about as an example of a very simple strategy for people to see that it doesn't have to be very complicated to start finding your edge. All right, Cello, hopefully that is satisfactory to you. Let me double check here. Bobby Fisher, thank you for that. Makes me blush. Under this mask, I'm blushing right now. Vic, I found your order blocks lesson very game-changing. I want to thank you again for sharing that for free. No problem. That's what we do here. Terrence Chan says, I've got funded. I just got funded on a 5K account with the 5ers, but account got terminated after the risk management sent me an email on clarification on my name. All right. I hope you will resolve this with them, Terrence. We always do our best to be as reasonable as possible with everyone. So email them if you think that is necessary. All right, let me double check. Gold is in action, someone says. Hi, daily vlog mixer. How are you doing? Thanks for saying hello. All right, so let's take a look at the markets. What do you guys say? Remember, do me a favor. Try to find. Let's do a scavenger hunt. Let's try to find the like button. Let's see if this is the challenge. Let's see if you guys can find the like button, and whoever gets it first, click it. Let's see what happens. No, but jokes aside, if you do us a favor, like the stream if you think this is something that is helping you approach the market and expanding your knowledge about trading, system building, and everything in between. Let us know let us know you like the stream by clicking that like button, and subscribe if you haven't done so. Last week we had a massive, never seen before giveaway event. 50 accounts, right? 50 20K bootcamp accounts were given away, 10 per day. And that was because we reached 90K and because it was the Black Friday week, right? But next milestone is 100K. I don't know how far away we are already from 90, but that's our next milestone. So you can make that day come, earlier by subscribing to the channel. When we hit 100K, it's gonna be massive again, right? It's the 3 or 6 digit number, 100K. We haven't reached that, right? It's gonna be the first thing. That's what milestones are. So let us know that you want that to happen to you or to us, to the group, to the audience. You want those giveaways again. I know who doesn't love giveaways? Who doesn't love something that's for free? Yes, you can connect with MyFX book, the accounts that you trade with us. I assume that's what you mean. I can't read your name, but Yimari Yizinanu. Yes, you can. Just like any account. I actually recommend to do that because it's free and you can you can do some powerful, even if it's simple, not simple, even if it's free, you can do some very powerful analysis on MyFX book. I speak from experience. I use MyFX book every day, and it helps me you can put portfolios. So when you have a lot of accounts and you want to have a overview of what are they doing as a whole, as a portfolio, MyFX allows you to do that. Put them in a portfolio and you get some numbers, totals on the day, and I can check all my accounts, how they're doing with just a few clicks. Sometimes I even have different portfolios, and just by clicking one, I can see right away, okay, this is doing fine. That one, something is happening with this account. I can go in, and that's just by looking at MyFX book. So I totally recommend that. No problem. Thanks for the outside bar info. So this will be helpful. Yes, you can. And there is it's not so hidden, but the strategy, that simple strategy that I just gave you from the outside bar, there are so many parameters, so many variables that you can choose and add or subtract things from it, and build another simple strategy by doing something similar. Instead of outside bar, use it with engulfings or use it with pin bars. Instead of using limit orders, you can wait for something else and then you enter at market. There are so many things. Or you can use another strategy, for example. Let me go back. Man, I'm giving you guys all kinds of strategies this week. All right, so let's see. So you take, this is, let's say, step number 2. So you have the order block created by an outside bar. Okay, so we just talked about that, right? That order block. And before, we talked about the outside bar, and you choose a level. Either, that's not what I wanted. All right, so you can have either a level in here, or one thing you could do, for example, is wait for the market to come back to that order block, right? Wait for the market to come back, and let's say you go to the 1 hour, right? And this is a good one. Okay, so let me put the replay, right? So you're here. Let's say price comes back. So this is on the, you can do this on the 4 hour again as well if you want, but I'll do it on the 1 hour. This is already using 2 time frames, but hey, you get the point. Right, so you wait for the price to come back to the order block. Right, so there it is. It came into the order block. And let's say you wait for price to have its full range inside the upper border, right? So you drag any level. It doesn't have to be the upper border. It can be any level. Maybe the midpoint. Maybe whatever level. You choose the level, right? So let's say it is. I do use the upper border of the order block, and then you wait for the complete candle to be below that. There you have it. That's one. Right, so you have the order block on H4. On H1, you wait for the complete range to be within the order block. And then you put a stop order, right? A stop order outside of the order block, right? Maybe over here. So that means if it's going to go up, it will trigger you and you will be in the trade. And if this does not come back, let's say it moves like so, it does something like that, you will not be triggered. The order block will be invalidated, but you will not be in the trade. And you'll be having a stop order right here, waiting for price. If it is going to reverse, which you expect because of that H4 order block, you would then be getting in. Okay, so let's do that. Obviously, we know what happened here because this is replay. We know already. So there you go. You're not in yet. There, that's where you get in. You put your stop outside of the order block. Your stop outside of the order block, and that is just one example, right? You don't have to exactly do exactly this. You can think of any other, and you know, target higher, and you know, wait for either one of the two things to happen. Either it hits the TP or stop loss. In this case, bingo, it hits the TP. We know that because, you know, we have seen price. It's too recent in time. We see that it, you know, price reaches the TP. That is just that's another level, because you're already using 2 time frames in some price action triggers to get into the trade. But all right, that's you like that, right, Tello? I know you do. As an example, it's just a template, right? It's for you to figure out what exactly. But in that example, yes, it's stop order, because it's going to be above. It's a buy order, buy stop, because it's going to be above the price, right? And if it doesn't, the good thing about a buy stop is, you know, if price doesn't come back and go in the direction you want, you won't be in the trade, meaning you're going to be avoiding a couple of losses, right? So trades that would have been losses, you're not part of them. Those that went straight through the order block and did not get the reaction you were expecting. But the bad thing is that not a bad thing, but the disadvantage is that your entry will be at a higher level, right? Because it's going to be higher than price. So that means that the distance to your stop will not be the tightest. So you're basically exchanging one thing for another. It will have better win rates, but worse risk-reward ratio. And both of them can be profitable, but sometimes there is only one that's going to be profitable or more profitable than the other. And you have to figure that out. And that is just one example, right? But that's just a template. You can use, you know, any combinations of rules, very simple rules, but you have to have rules. Otherwise, it's going to be difficult to have consistency in the market, right? If you're just doing this one time, one set of way, or, you know, a set of rules, or even if they're not rules, one set of, you know, method, and then next time, over 4 weeks from now, you're not entering with buy stops, you're doing with limit orders, and then 4 weeks later, you're, you know, expanding the stop loss to being, you know, much wider. You know, if you keep adding these things and varying with the rules, then it's going to be very difficult to have consistency. You're gonna be all over the place with your performance, good or bad. Yes, you could use fibs, sure. You can use any level on the fib, right? You can use, it doesn't have to be 50%. You can use, you know, any of those beautiful fib levels, or 25%, or 75%, or 20%. The world is yours. Use it as you please. There's so many possibilities you can do this. All right. That's a very easy way to get into the market and participate, and you know, set and forget. Doesn't have to be, you don't have to be glued at the screens. If, you know, let's say you're in a 9 to 5, or you already have another strategy that you're building on, this can be something on the side. You collect data, and you start, and maybe you see it's, you know, it needs some work. You need to add, subtract things to it. But who knows? Maybe you'll find a very discrete, obscure edge doing so in a very specific scenario, on very specific moments or sessions, and that could be all you need. You know, the edge does not have to be big to be hugely successful in trading. It just has to be there, and it has to be an edge, and you need to be able to consistently profit from it. That's it. It can be a tiny edge, but if you can do that consistently over and over again, man, there's no limit. And it may come from corners that you didn't expect. It might come from left field completely. You didn't even see it coming. But until you test it out and look for that edge, collect that data, compare it, analyze, and you'll go through many things that don't have edges, or they're around break even, not really worth your time and effort and risk. But you have to go through that in order to find those gems of edges. It's not easy. It's just like mining, basically, right? You don't know what you're going to be getting, and it takes a lot of you have to go through displace a big amount of mass before you actually get to something that is worthwhile. But it's once you get it, of course, it's success. All right, let's take a look at yes, there are many plays. Kwakisa, how are you doing? Yes, there are many simulators out there where you can do just what I explained with backtesting, right? So you just simple strategy, you put it on backtesting. You don't have to wait for the market to actually deliver those outside bars. You do that over and over again. You collect, let's say, 50 trades or 30 trades. You collect the data. You look back. Does it make sense? Are there certain areas where it is more profitable than others? Can you add some filters and eliminate some losses without eliminating winners? Can you all these great questions that, who knows, maybe certain combinations of filters and entries and risk reward profiles, I'm pretty sure you will be able to see some edge. And once you have you get the confirmation that there is some kind of edge here, you can then amplify, basically focus on it, analyze more data on the edge around it to see if maybe you're not measuring the edge yet, you're only measuring parts of it, right? But so I know it's kind of hypothetical and abstract, but basically if you have one variable that is showing some kind of edge, you can build or test out different variables around it, right? And you don't know yet what you're going to be finding until you do it. But maybe that which you were measuring, it was just close to the actual variable that will give you the edge, or where the edge is optimal. And once you have that, that's where you put in all your resources to extract that, just like mining, as I said, extract the good stuff, the gold which is in the sand. Yep, thank you, no problem. All right, let's take a look at what do you guys say? Where do you guys want me to take a look at? In the meantime, as you guys are typing, I will be checking the EU, see if we've got anything here. Right, so on the daily time frame, you have prices going from one order block to the next one, which is perfectly technical, beautifully technical. Go to the H4, we have a reaction from that daily that is visible, very visible, wasn't able to close above it. It's not quite a rejection yet. On the lower time frames, you will see that as a rejection, but on this time frame, it's not really a rejection, it's just a reaction, not a rejection, in my opinion. On the H2, you see the same thing. And on the H1, same thing. You see all the power, buying power, very strong. As soon as we get to the daily time frame, you see that the structure on the daily time frame, you see that things change instantly almost, it seems, and we go the other way. That's not a coincidence. That has to do with the daily structure right here, which we ran into. Let me get an idea of the ATR. Let me get out of this replay mode. And the ATR currently at 56, rounded, and our daily range is currently at 63. So basically we're already above 100%. the ATR, so it is above the average, and today at 4, so in 21 minutes, we do have a PMI manufacturing coming in. So everyone, if you're trading, keep that in mind. It's a red folder, so if you're on a high stick account, there is a news restriction 2 minutes before, 2 minutes after, in which you're not allowed to enter the trade. Okay, if you're on the other programs, you're allowed to trade without restrictions. So we're already beyond 100%, but it's not clear to me. You do have a reason for price to go lower, but is this a fresh order block? Not really. It's already been retested. So that's I wouldn't, to me, that's not a daily. That can create a daily signal to me, or there cannot be a daily alignment with this this order block, because it has already been tapped into, right? It's no longer fresh and no longer untapped. On the 4-hour, there isn't anything. Let me double check that. I said there isn't anything, but I haven't checked that. So you got one. Yeah, it's just one big order block. It's all the way here, so it's not useful. This goes all the way here. Is one big order block. That's not useful at all. It is a valid, but it is an entry order block on the H4. But this is not useful, so we can't use it. Yes, neckline would be there. Yep. Let's look at the H2. So you got one, and then two here. All right, so there is a, I don't like it at all because it's so wide, but technically it is there. All right, and let's check the 1 hour. I think the 1 hour, it's too big of a structure. That's one. That's all of it. That's two. And we have number 3 here. All right, so this does look nice now that I... All right, so that's number 3. Have we reached it already? Yes, we have. Look at that. Ooh, beautiful reaction from that entry order block on the H1. Ooh, I like that. And it is within. All right, so this is the area. That I would have been trading from. That could give me a signal, even though the H4 wasn't very appealing. But the fact is that, all right, so let me go check. Beautiful reaction right there. All right, let me check a look. Nothing on the 5. Neckline is here. Don't forget, guys, hit the like button, subscribe to our channel. Yeah, this looks like it's going to continue, to be fair. I know it's already at 100, beyond 100%, but this looks like it wants to continue. It's not breaking any structures yet. As long as that's not the case, it looks like it's going to be looking to continue a bit higher. Yep. All right, so there's a 2-minute there. And yep, I see that too. All right, so let's break this down, see if there are any entries here. Live trading here. So we do have, let me double check this, 1, 2, and yes, okay, so we do have something here. All right, one, 2, 3. Have to check that as well. Doesn't have a body. Yep, it's good enough for me. Okay, so if price comes back to these areas, these are possible areas that I would be looking to get into. Remember, there's news coming out, so that would be something you most likely need to filter out. There may be an overlap here. Let's double check that. No, there isn't. There is no overlap. So that means, is there? I think there is. What's the high on this? Is 48.4. The open is 40. So basically, it's just one big one. There we go. All right. Actually, we already had the entry there. Look at that. That's the left shoulder, the head, break of the neckline, comes back, hits the order block, and boom. Beautiful. But we'll see. That's on the 1 minute. On the 2 minute, we do have a couple of structures here. Actually, just one big order block right here. And another one here. Same as the 1 minute. There we go. So just wait and see if the market comes back. If it doesn't come back, then there's nothing to do. But the fact that it only broke on the 2 and the 1 minute, that's when the market is not ready to actually do a sizable reaction. You know, when the market is ready for a much bigger correction, right? For much bigger correction, you want it to break not just the 1 minute and the 2 minute, you want it to break all of them, meaning the 1 all the way to the 5 minute. And then you have something that could be moving much deeper. So you want price to break this and then go up, and then maybe if it signals, you take the trade short, right? If it's only doing what it's right, if it doesn't break all of it, the probabilities that market will continue higher are quite likely, are quite present. And so you want to watch out for that. Anything can happen, but I mean, this is generally how I trade. So you want to see break of structure being on, not just on the 1 minute and the 2 minute, but you want to see it on the bigger time frames, even on the 15 if possible. All right. Maxwell asks, does the 5ers allow trade copiers? Yes. As long as it's your strategy, your signal, your account, yes, and yes. So you're not allowed to copy from anyone else. You're not allowed to use strategies that are not yours because, it will pop up because others will have the same entries, same trades, same strategy. And that's obviously not allowed, right? We want to be fostering, we want to be identifying the trades that you are able to make, right? We're interested in you, not on someone else's trade. All right. Kaiser Amir, how are you doing? I'm Bias Trader. How are you doing, my friend? Hi there. Kaiser Amir, thank you for your nice words. All right, here we are. So that's basically this area is very interesting on EU for a possible, and the fact is it already had a reaction. It's not convincingly broke structure yet. However, if it does, give us the quasi that we're looking for, perhaps around this level or perhaps around the head, then, maybe you can, well, that's just a suggestion, but what I would do is I would still get in, right, at this level, these two entry order blocks, either this one or that one, and then wait for the market to break it perhaps later. And that happens, and I know it's going to come back, maybe not completely to retest everything, but I know it's going to come back. But just by the fact that it breaks structure, that allows me to target, hold it through, and perhaps for much bigger areas to go for as targets. It has to do it within the same day, though. Not something that takes, if it gets here, you get an entry and it just goes here, goes sideways, then that's no good. You want to see a reaction, and you want to see it after it has the reaction. You want to see it break some relevant structures that indicate, that opens the door that the market is ready for, some downside action. If not, then it's better just to close the trade at the end of the day, the end of the session, and then look for another opportunity tomorrow, right? There's plenty of opportunity all the time, constantly. There's no rush. You don't have to do anything. Marina says, bye, see you later. Marina, till later. And later, you're asking, does Marina know Victor? What do they mean by later? Yes, we're going to get together later. I'm going to get together with Marina, but not only Marina, a whole bunch of other traders inside the Discord. We have a very nice group where we come together on every weekday, and I only host a couple of those sessions. Rich, our in-house performance coach, hosts some others, LJ as well. So we have these sessions where we come together and go in depth, and we try to, we spend time together talking about trades and sharing our experiences. And sometimes there's just one question that we go way deep in for the whole session. Sometimes it's different things, and I give some ideas, some education there as well. So what I'm trying to say here, you're welcome to join the Discord community as well. Actually, it's an invitation. Come and join us. It's you're gonna like it. I'm pretty sure you're gonna like it. The way to get in, Marina says, an awesome community. At the end, there's 10 hub credits, yes, but if you ask me, that 10 hub credits is just a detail. It is the connection we get, the moment we spend together, that's actually way more valuable than just 10 hub credits. I'm pretty sure if we stop those hub credits, we will have the same number of people in there. So yes, the way to get in is through the hub, left lower corner. When you have an account, you don't have to have an account, right? You want to be part of the family of the 5ers, you have to have an account. Once you're inside the hub, left lower corner, you'll see the icon for Discord, free entrance to the Discord community. And there you will see us on every weekday, connecting with you, trying to share our experience. it's made by traders for traders, right? I'm a trader. I will show you my trades. I'll talk you through perhaps, or explain to you why and how, and maybe other people may have their own. We share strategies as well there. Many members, they will very generously share their strategies, and you can test them out, see if that's something you can use. I've seen a couple of great strategies gone by that I would like to test out myself, to be honest. All right, Jimmy here is yes, indeed. Hi there, my friend. All right. Jimmy is asking about gold. We still have about 5 minutes, so let's take a look at gold. Let's do a top-down analysis on gold. What do you guys say? Don't forget to hit the like, subscribe, do something back for the 5ers if you think, right, pay it forward. If you think the 5ers is giving you value, then don't hesitate and subscribe. All right, so we have the monthly time frame. Nothing here that I can, based on order blocks and quasi, say the last order block is. This is a new month, so that's interesting to see. You have the monthly order block still fresh, but way far from current price action. On the weekly, we have a weekly on top of a weekly order block being created, right? That was already a week ago, not last Friday was created. Let's zoom in and take a look at this, right? So you have the there you go. All right, so we have on two bullish order blocks being created on top of each other. That's the market telling us they are getting ready for that push, right? Getting ready. It's already, I mean, the market creating it already is in the process of pushing up, but it means that the market is, the buyers are getting hungrier and are likely to be pushing price much higher in the future. That's what it means, right? So we have a fresh order block here that we could look for retest in the coming weeks, right? Something like that as we go up. On the daily time frame, we do have a fresh, it's not fresh anymore. We do have an order block there. Previously, we had a very beautiful reaction from it. Now it's already the second retest. We can still have a reaction, but it's likely to have a less of a reaction. This was the first reaction, and maybe a tiny reaction, if any, before we continue to go higher. All right, that's the likely based on the order blocks, or maybe just gonna go through it. Everything is possible, right? So you gotta be nimble, gotta be ready for whatever the market throws at you. We have fresh order blocks on the daily being created here. Is there a quasi on the daily? No, there isn't. So we can, just look for entries, not entry order block on the daily, just a regular daily order block, and another one here. We're not interested in the second one, at least not yet. But if it were to were to invalidate the first one, then of course the second one would be something you would want to trade. These are still fresh, all of them. I like specifically this daily because it is within the weekly, but that's something for later, right? It's not here yet. So all right, so we have the fresh order block. We could be waiting for price to come back to this order block, and then you want to be waiting for price to have a reaction to something inside this order block, right? So you have a couple of options. This one is already retested. It's not fresh anymore, so that makes it a little bit difficult to use, to be fair. This is a tiny one which has already been already retested. So they're basically not what you're looking for, but still good to have them on your chart, because the market, even if they're not the best structures to trade from, in the absence of anything else, the market will definitely use them if the market is going to move away from it. All right, so we have a nice area here that I totally see as a possible areas we can have a reaction from. Yeah, so what I would be looking for is to begin with this area, and that one, right, where you have these overlaps. They're especially interesting to trade from. Let's take that out. Right, that little area, or you can just wait for the market to reach, let's say, this area, and then you go to the 5-minute and look for those beautiful quasi to move away, right? Once you see these things, these reversal patterns happening either in this one or perhaps in the one below, you can, once it breaks that neckline, you can start getting ready for that possible retracement, and then you get your trade platform ready to get in, and then target those higher time frames, is if that's what you prefer to do. But right now that's not happening. So let's look at current price. It's actually, we have news coming out. News just came out. Let's take a look. PMI, manufacturing PMI. Let's take a look at it. 30 seconds ago, had a little gap here on the 1 minute. Not really a lot happening, at least not yet. A little gap of what is it? Not a lot. That's what, 1.8. Not very impressive. The first candle's displacement on the from the previous candle was only 6. The ATR is 2.2, so almost 300%, which is nice as a volume candle, a momentum candle, but not too impressive. Six pip. That's doesn't really impress me that much. All right, we have come to the end of our stream. Sadly, I would have wanted to go through this and many others pairs. Yes, Peter Tillema. Yes, there was news, as we just mentioned. I would still trade it. Yes, of course, I would. But it depends on how close my entry is to where the news hits the market, what level the news hit the market, and where my stop is. Right? If it's a tight entry, then I'm better off just taking that trade off and then waiting for the market to set up after the news. But if it's something that I'm already in, I will definitely just let it run. If there's enough distance to my stop, for sure. I've seen many times I get in with a good entry, everything lines up, I put my stop, and there's just enough distance for me to safely leave the trade open. News comes in and it takes me away, and in no time hits my TP, or in any case puts me very close to the TP. All right, Jimmy, my pleasure, my friend. Come and join us in the Discord if you're available. All right, that's it for me and for this week's, or this Monday's live stream. I hope you guys have enjoyed yourself a lot watching us breaking down the news, or breaking down the charts, I should say, and discussing things traders discuss. That's what we do here. So have a great day. Enjoy your day. It is the last month of the year, so get those end of year analysis ready Start looking at what you can do to improve your skills, improve your trading. See where is it that you're leaving edge on the table. While doing that, hit the like button, subscribe to the channel, because we have a lot more to offer. This is only the beginning of the 5ers. So stay tuned. Come back tomorrow, and we will be here giving you the best value we can share generously to you all. So that's it. Have a wonderful day. See you guys tomorrow. Bye-bye.